Ow! Good morning, my friends. It's Halloween. Here we are, October 31st, 2023. And what a day it is going to be for sure. Only, I think we only got 12 hours left of our last Mentors post here on YouTube. So enjoy the wisdom. You've only got another 12 hours of that, and I think after 11th of November he is all done. So those of you who are out there still learning any ICT concepts, he's the man to see. You got him for the last little bit. Definitely review any of the videos you see on his YouTube channel. If you can get access to any of his X stuff, or Twitter as it used to be, you definitely should. He is the guy to see. He's the guy to learn from. And with that, let's start applying some of those principles that he has taught us. All right, British pound. Here we go. British pound daily. We've come back up into the rejection block, hit it perfectly up there today. And now we're pulling back into this little consolidation. So this order block we see on the downside here, let me get this a little bigger. This one's actually inside this one. So if we have the threshold of this candle is the bottom, looks like it's hit that already. So where have we got to go? We either have to blast through this order block threshold, reaching for rejection block and high. Then we have this guy up here, which we've already hit the threshold of the up close candle. That would be a breaker because it's actually a tad bit lower than that one, so that one makes this a breaker. So we've already hit the threshold of that breaker. We've hit the threshold of this one. So the only thing to do now is, if we're going to go up, we need to blast through those one more time, clean them out, and then start getting on top of them, start running up higher. If not, we have these lows, the rejection block down here one more time, and then back into the daily fair value gap we have down here. So the potential for this to just continue to degrade down is much higher than it is to continue to reverse. So my call is more down on pound, and euro went to where we were calling for yesterday, which was reaching up into this daily fair value gap. That literally reached up into it with the rejection block, hit it inside the fair value gap, and has retraced right back down into the inversion fair value gap on a little tiny guy sitting right here. So if British pound is down, chances are euro, which didn't have a very strong push up there, we may get a run back down into all these new week opening gaps that are sitting down here. There's a little tiny price imbalance still sitting down here, so look for prices to run down into this area here, which is also the last down close candle here. It's also this cluster of candles here. This daily fair value gap inversion. We've gone up, gone through it, come back to find support at it, and start to run back up. So look for, you don't want to see it, I don't want to see it really return all the way back down to here. Back to this price imbalance is pretty much where I'm looking for a possibility of a reversal. If not, if we lose that, we're going to get back down into here again. Then from there, we're back in the consolidation, so we're looking to run out these equal lows that are sitting down here, and then eventually lower prices. So that's the key area for me. You want to see that holds price on all those new week opening gaps. Provide some support for prices to continue back to the upside. But for now, down. CAD. Man, is this ever working like a trooper here? We had to break through that fair value gap we talked about. Became an inversion fair value gap. We wanted the fair value gap to form in here. It did. We broke through the price imbalance on the top. Then we wanted to see it get support at that. Come back, found support at it again, and now it's pushing through. So now we're looking for higher prices. We're looking for runs on these highs and that old high up there. Finally, we had a big strong day today. We took off and we've had nothing but upside. We're back past that midpoint of the wick, and now we're heading for the high that we've been calling for the last couple of weeks now. This one did exactly what we said. Australian dollar is sitting inside that fair value gap, just banging around inside there. You can see how the bodies of the candles have respected the 25% portion of that range to 50%. And there's just been a lot of wicks, a lot of poke ups there into there. So we're looking for a reversal back down into here. The bottom of that fair value gap, you want it to provide a little bit more support again. And then we want to see it reverse, get back through this, get on top of these old highs here and start reaching for higher prices once we see a breakout. We've already cleaned out these lows here. So if this wick holds price, we just want to see if this fair value gap finally lets go of the price action that we have right now. New Zealand dollar, similar type of principle. If you look at the SMT, New Zealand dollar finally gave up the ghost after all that time that it was the stronger of the two pairs. It finally gave it up. Ran up, cleared its old highs out. Australian dollar hasn't cleared its old highs yet. And we have the breakdown finally occurred. And now if this order block holds price, we just wicked above it here. If this order block holds price, look for us to return up into the higher portion of the weekly fair value gap. I'm still liking this draw on the lower half here. So I'm not bullish yet. I'm still bearish on the New Zealand dollar. When we get into December, I get really kind of excited about this one. I've mentioned this a few times now. The New Zealand and Aussie dollars are my picks for December. Their seasonal tendency is to turn in December. So keep an eye on those guys again. Oil, boys, I never faffing around. We ran out, took these old highs out here, ran below the lows, took the lows out finally, cleaned out everything, went all the way down to the bottom of the weekly fair value gap. And now we're kind of just faffing around that's what we say in England, faffing around. We've got the 75% of the upper portion, 25% of the lower portion, and we've already had the mid portion of this worked. So if we get this continuing working in here, we may get one more tap down on the low, because after that, what do we got left? We have a drive through here and much lower prices and much bigger draws on liquidity down below. So we'll see how oil reacts. I'm still looking for natural gas to continue up. So we've got equal lows sitting down here. We've returned to this order block, so chances are we've got more downside on oil. As much as I hate to say no, I don't want that. Natural gas responding just the way we want. Came up, broke out of this weekly fair value gap here. Returned back to it. Busted through this guy. And now we found some support. It opened just slightly into the middle of it. Went to the bottom during the week. And we've hit the bottom of the weekly fair value gap. And now we're starting to get a push up, which is what we're looking for, is a run up into here now. So it's working quite nicely. So off that price imbalance there, hit the top of it. We gapped up a little bit this morning, or yesterday, this day as it starts out, and we're looking for a run up. I just want this to continue. I don't want this to just hit this rejection block in here. Like 25% of this wick, find some weakness, and then start coming back down into the range again. I'd like to see that just tear right through that. We have this price imbalance. We have hit the edge of it here finally. Well, now look for this. Is there an SMT? No. So NASDAQ is coming into its price imbalance. We have US 500 coming into its price imbalance. So I'm liking this for further push up into higher prices. Get on top of this weekly fair value gap now. And I'm looking for the same thing for S&P 500. Now they seem to be more in line with one another now. There's no divergence going on here. Other than the fact that this daily candle's made a new higher high, and this daily candle has not made a new higher high yet. So there is a divergence going on there. See that? Let me make this a little bigger for you. That's the daily candle today. It broke yesterday's high, and this is the daily candle today, and it has not broke yesterday's high yet, but we are both inside those price imbalances we've been calling for a couple of days. So all we did is return back to the order block, and now we're pushing for higher prices. So I'm liking a run up today. Japanese yen, Canadian dollar starting to get a little stronger against the yen. You want to see it now get on top of this daily fair value gap instead of using the bottom of it. Ran down, took out the lows. Now it's coming back through it. I want to see it get some support here and run out these highs now and back up into this order block here, which is actually a breaker. Gold. Gold looks like it's found some support off this 1989 level. We want to see this daily fair value gap hold price. We might be baffing around in here for a little bit. I'd like to see it break out of here, get on the top here, get some support, and continue to run up for higher prices. Dow Jones coming back into the order block here. There's a little daily fair value gap. We wick through it. The bodies are respecting inside it. We came back to the mean threshold of this order block here, and we're looking for further downside. So it took out yesterday's high. So tech was the only one that has not taken out yesterday's high yet. So your S&P did. Tech didn't. And Dow Jones, we'll put those right next to each other. Dow Jones did. So tech's the only one that hasn't pushed through for higher prices yet. But see, tech has worked at the entire price imbalance. S&P 500 hasn't. And Dow Jones doesn't have one. At least not on my chart anyway. It might be possible on your charts, but not on mine. All right, that's my daily summary of what's going on. So now we're going to look into I like tech in US. I like this S&P 500 here. So let's get down into the, let me make sure I've got all my peeps can see me here. Just double check, make sure the site is up and running. And we are live. I see that. And Joey, good morning, Joey. This morning, just coming on the site now. See, oh, we got 3 people on board already. That's good. Check S&P has a 1-hour order block with displacement. Morning, Kevin. So S&P. I'm still looking at this piece in here, so make this a little smaller. I like that breaker we talked about on Friday. I'm looking inside here. I like this. I had this one last night. I'll show you my trade. I don't mind showing you how I lost it. I literally was too close. I put my order in here, put my stop loss just below this low, and it came down just like that and took me out. That would have been like $16,000 or something like that. If I'd have put a little bit lower into the threshold of that candle and said, yeah, we'll take that as the low. But it literally came down and took me out. That's okay. That's too tight, the stop loss. We're coming into that there. I've got a long right here. This time I put my stop loss at that threshold. I'm going for price and balance up here. I want this breaker to hold price, this fair value gap to hold price. Price and balance here on the daily. The final run down into that that could weigh heavily on the S&P now. If they're driving this down into here, I could be on the wrong side of that. They're getting back into this price imbalance down here on the new week opening gap. Dow Jones. Back to the order block. These guys took out their highs. Hasn't taken their highs out yet. Hourly. Took out their highs. So you can see how Dow Jones took out the highs of the last 3 days. Tech hasn't. And S&P 500 has. So tech's the weaker one of the two. Let's look at GBP. Back into the order block. Just ran the lows. There's a lot of mess on that one. Get down to the hourly now. Looking for this to hold price here on the euro. The euro is going to continue up. Get through this, start getting back up into these old highs here. That breaker's got a hold price. That's going higher. Reacting nicely off of that inversion fair value gap. Japanese yen looking for a run up to that high. Wow, that's the opening today. We're on a big run up today. The only thing I can see is the order block breakout, return to the top of the order block, body, new order block, return to the body, leave, create a fair value gap right here. You get in on it there. That was 6 o'clock. Run up for old highs. Reprice, rebalance. So you treat that like it's in a fair value gap. Another return here. One more opportunity here. So there has been opportunities to get in on that. Australian dollar still sitting in the middle of the fair value gap on the daily. We want to see this to provide some support. Now we've hit the threshold of that order block. You want to see that continue to hold support now and start to run above these highs and get back into this range. Oil looks like it's gonna, if we lose the bottom of this fair value gap daily, we're looking for a run down into these old lows here and then a draw on the liquidity on the higher time frame, weekly, monthly. I like to see this on gas doing exactly what we mentioned. Weekly fair value gaps are supporting now to become an inversion fair value gap. Find support at it, drive through. This fair value gap becomes inversion now. Does it provide support? Yes, it does at the very bottom, and now we're pushing up through, looking for a run up into the higher prices in gas on the daily. So we're looking for, I don't want to see this rejection block hit here. I want to see it kind of roll over. Good morning, Lordston. How are you? I'm looking for this one to close inside this little gap here or above. I don't want to see a body close below here on the hourly. Otherwise, I'll just peel out of that. That's my rule. Tech's actually gone all the way through into the rejection block. Dow Jones. Are we on the same one here? Hourly. Yeah. Dow Jones is blown all the way through its one as well. S&P is the only one that's got some strength here. This fair value gap seems to be holding price on the S&P versus tech is letting it go. They've already drove right through it into the rejection block on the lower side. Dow Jones, it's given it up already and blown through. So of all these, S&P seems to be the strongest. You got one trade this morning. Good for you. Which one did you get in on? One trade this morning. Eleven more minutes. Dow Jones short. Ah, yes. Breaker. Return to breaker, I bet. I bet you this is where you're at, right? Got the breaker. Go down below it, come back into the breaker right there. Are you short right there? That's my guess. That's a Lauriston, classic Lauriston kind of a attack on a breaker. Is that where you're at right now? Is the 32,999 somewhere around there? I guess it would be different on your platform. This 1 minute probably proved me wrong here. I'm out. So if this is pushing through here, running it back into the new week opening gap, this guy's finally giving up the ghost. Morning, Derek. We missed you yesterday. Oh, I wonder why it was so quiet. didn't have my Skype on. How low can she go? Well, it looks like tech is now reaching into the price imbalance, or the gap, the new week opening gap. And S&P 500 has not quite decided to run there, so this one was the stronger one of the two. I just got in. I got in long here last night. Put my stop loss. I got in right at that bottom here. Got in long. Put my stop loss below here. It came down. Just took it out. Went up, and then I thought this would provide some support here. On top of that breaker, and then bottom of the daily fair value gap. I thought that would be a great place to get long again, but it looks like we've just broken down through. These guys didn't take out our old highs. Like I did. So tech was the only one that didn't take out the previous day's highs. S&P 500 did. Oh, it took this one out. Did not take the one out from 3 days ago, though. Okay. They're running out the low in London. Dow Jones is running out the low in London. And the S&P 500 has not taken that out yet. Had a couple of physicians visit yesterday. Eye, etc. Nothing major. Ah. Well, I hope everything stays okay, buddy. Coming up for 8 o'clock now. If this is the draw on liquidity, according to Dow Jones and S&P, mind you, Dow Jones is way down here. Come to the bottom of the weekly fair value gap, and we seem to be having a bit of a reaction off of that. Is this where I get the reversal? And beat myself up because I left too soon. They came down with this lower little fair value gap down in here. Still inside the breaker. I'm going to move this guy here now. Two more minutes. Where does this close? So that's the inversion now. Come through it, find support. So this looks a bit more. Let's see where this one ends up if we get below this. Then we're looking for these lows. Threshold. See our price holds here. Let's get down to the 1 minute. I think this one was the one we're looking for going further down. So we've got the return to this breaker here, right on that line. We got it with that candle there. So further downside, reaching for these equal lows here in this fair value gap down below. So that looks like the silver bullet entry right here. So looking for that, I guess, to be the first silver bullet entry off this order block here. Take the bottom or the body, which is about the midpoint of that fair value gap there. That could be the first entry. Take an entry there. That's the bottom of the candle, midpoint. Now you want to see that kind of stay open now and not fill. This could be the 12, 17, 12 reversal. You went long in here. That's the breaker right there. Look, I'm playing off of that. Yeah, that's a good call. Get a body above that fair value gap. Not quite the return to it yet, but yeah, that's playing off that breaker there. Good call, Joey. I obviously got in way too early. Yeah. Looking for the same thing on the NASDAQ. Break up above, return into here. Not quite got it though. It's on a tear up. Took 5. Good. Neither one of the three gave us an opportunity to play off the fair value gap, at least anyway. So I'm glad you guys caught that right off the breakthrough here. Return to old high. Perfectly off the old high. This one popped into the fair value gap down in here. Price imbalance. How's our GBP doing? Oh, that took through. That's the 1712. Dixie showing its hand on the new week opening gap. %50 of its AM range. Good call, Joey. Excellent call. Let's get refocused here. Now tech still hasn't taken out its daily highs. Around the lows. Next objective is those daily highs. Can you feel my pain now? When I was in here, stop loss was here, chickened out too soon. Should have stuck with my original plan. But the rule is if it breaks there, should have kept my eye on this one here. That's okay though. Gotta go with my original idea. So looking for these equal highs here and the rest of this gap here. Watch this order block here. We've just come back to the edge of it. Body. I'm expecting that to kind of just let go. Go straight through that and run for these highs now. Dow Jones. Hourly. Fill that fair value gap. It's already run its highs over the last 3 days. Looking at this one down here. Yeah. We're breaking structure, but didn't get a fair value gap to get in on. Breaking structure, no fair value to get in on. Tech, 1 minute. Low, fair value gap to get in on. This is the only one right here. That's after the 12. That's 11. This is the 12 right here. Inversion gap there. This is my last trade. If I don't get this one, I'm done. Try the order block down. I'm looking for some support in this inversion fair value gap here. For the 30. Looks like the DXs are due for a retrace, but don't be fooled, we are still respecting the breaker created during the Asian high. We're really between here and here right now. That candle's low, this candle's high, this is the breaker. Now we've got this fair value gap here. You want that to provide a level of support. We've got the New York. Yeah. Okay, so retracement, don't be fully respecting this breaker created during the Asian high. Yeah. I agree, Joey. That breaker on the Dixie still supporting price for sure. Let me just come back and revisit it one more time. Yeah, we dug into it pretty deep, so chances are we could hit it one more time next hour, and then the run up into the rest of that fair value gap on in the dollar. 106.43 with the fill on that. We're also between that breaker though on the 30th, the one above us there. There's a breaker there that's kind of we're bouncing off that one and the one below. Fair value gaps to draw. I gotta use some less abusive colors. Like these ones are super bright. Let me go with something. Yeah, lime green's always a great color, right? Let's just tone it down a bit. Anyway, just take 1 minute. That's the sweep below. That's all I needed. This may not be for the next hour. 27, 28. So I still like the 50% of this range. Return to the consolidation. You want to see this one stay open as a breakaway gap. This one would be around the 50% range of that small range that was created after the breakout. I'm going to wait till we get back at least 50% of that. 62% is over here. I'm looking at 50% of this range is in here. Of the main range, 62% puts us back into here. 75 and 79 puts us into 50% of that consolidation. So level of supports right now. The 1 minute swing projections we have on ES, everything respecting the tick today. Did you try on Skype again, Joey? You could try it on there again, see if it works. Wasn't up earlier, but it's up now. Just chilling and listening. That's fine. Skype link when you get the chance. Well, you just click on the same one I gave you yesterday. Oh, you don't still have that one? Stand by. There you go.
Hello.
Hey.
Good morning, Darren.
Good morning.
Are you done taking trades for this morning?
I'm still waiting on one, but it's looking pretty grim for me this morning. I've been picking the wrong direction today, for sure. I got in a little late on that S&P 500 one.
You're still bullish?
On S&P, yeah.
Yeah. Okay, I just want to show you something. It should work now that I have I'm signed in and to Skype this time, not a guest.
Right. There we go. Yeah, I see you now.
You can see?
Yeah.
Alrighty, so this is Dixie. A little messy, but all I'm looking at right here is the hourly chart.
Mm-hmm.
And over here, low, high, lower, low, leaves it.
Do you mind if I put this on the thing so everybody can see what you're talking about?
Oh, for sure.
Okay, in a second.
I want who said it to see this.
Speaker view. Let me get this on there so people can see it. All right. There you go.
I just joined the call. I heard you say it, so. Good morning. Morning. So I'm looking at Dixie right here, the hourly chart. I'm just highlighting the last down close candle before the move down. On the hourly chart, you can go to a 5-minute chart to look at how this breaker is respecting. And here we touch it once, the bottom. I have a M15 gap right here. This, it can also be a M5 gap right here. But if we were to be bullish today in NASDAQ or SPY, we would require Dixie to either inverse from this breaker or inverse from this M15. But as it stands right now that we're respecting the breaker, we can't be bullish SPY or NASDAQ because this looks like it wants higher prices. These ranges right here on a 1 minute chart, this is just the fair value gap here. So I mean, this could have inversed here, and it didn't. So this is still showing strength. I say, I mean, this is the trade I took this morning. I had something like this. I was just dealing with this range right here, and I was like, okay, look at the soup. We souped right here. Didn't respect the OTE because I was thinking maybe we go into 62 and then come back down a little bit because this looks like we're due for retracement. And this green line, this is that line I was telling you guys about yesterday. This is just the long-term equilibrium for like this whole range. This is this long-term equilibrium. So for us to have this huge up candle through equilibrium, I think we could still revisit this, but that idea doesn't come until we get below this breaker and below this inversion for value gap or this. Yeah. It's not inversion yet, but that's what I'm looking at. So on the 1 minute, when I saw us soup this high right here and go straight to the new week opening gap, and it's literally 1, 2, 3, 4, 5 minutes we're sitting up there, and I'm seeing us closing right here, and I'm like, okay, I'm going short right at 10:05. Not short, I went long on SPY at 10:05 because of I know for sure, and this is low liquidity right here, low resistance liquidity. So you have a high resistance, higher time frame PDRA, and then price would want to come back into this gap, low resistance. Right. So that's why I took that trade. And then real quick, I'll just drag this over. So, and I can't go full screen on this one. I don't know why my shift button doesn't work for this screen. So I just have OT drawings from the AM from 8:30, just the highs of this morning. Dow Jones has the highest high this morning. And that's why I took profit here at the 50%. It was right here. Because I didn't know if we were going to come back up into here and then retrace, because, yeah, you never know. But, look at this breaker. Okay, so what I wanted to show you was the swing projections. All right, check this out. This is 30-second chart. I mean, you can still see it on a 1 minute chart. But here we have, and don't worry about this, I love brandy. I'm just showing my wife how I use the indicator on top. But here we have the H1 plus breaker right here. Not plus breaker, order block with a H1 fair value gap with midnight opening price. So we come into the H1 and ES and Dow swept this low right here. NASDAQ didn't, so it's the same pattern as yesterday. NASDAQ usually is the one running lows, not ES and Dow. So to see that and see Dow holding up, it's pretty important for me. So this is the leg of manipulation that took out this low right here. And on a 30-second chart, or even on a 1 minute, it's one candle. Right. But 5-second chart, it's a whole leg. This is a whole leg down. This is fractal. So boom, 4 standard deviation, touch it right here, reverse. Right. So then we come up here. This is a leg of manipulation that took out this high. Right. So I measure that leg, and here I'm seeing the 0.5% lining up with this H1 inversion for valley gap. This is this inversion for valley gap right here. And I see that, I'm like, all right, we're gonna go here for sure. Look at this. To the tick.
Oh, nice. Yeah.
To the 0.5, come up. And this is the trade I just missed. This 5 inversion for valley gap, we came into it. We hit the 0.5, inversed off the 5, and I knew like either the 1 or the 1.5 could get touched since it's in the breaker. You know, headed down towards the breaker.
Oh, yeah.
And this 1 standard deviation is sitting in a liquidity void, so it's like, okay, I know 1's gonna get hit. 1.5 I know is gonna get hit because it's the breaker, you know.
Mm-hmm.
And then you start questioning, oh, is 2 gonna get hit or is 2.5, you know? But here you can see the breaker was it. This is the 2022 model, isn't it, right here? Because we had a low swept right here,
Yep.
breaker, and it's inside the 10 to 11 o'clock hour with displacement, order block with displacement. This is, oof, that was beautiful right there.
Mm-hmm.
So I hope everybody could see what I was talking about with the projections and how to use the last leg of manipulation to
Pick your
project.
projection. Yeah. That's awesome. Thanks for sharing that, man. That's awesome.
Can you just bring up your Fibonacci screen real quick? I want to take a screenshot to see how you're setting.
For which one? This one?
Yeah.
So 88%, you can use as a stop loss, or you can use it as it's like a soup run. It could be a soup run as well. So if Nasdaq's hitting 0.88% and ES is hitting 50%, then you could short the 88%. But most of the time, if we hit 88%, we're gonna have a small retrace and then actually usually break out past the 88%. So if anything is willing enough to retrace back and hit 88%, like if this was if this was willing to come all the way back up here, that tells you, hey, this is strength, because we're gonna be going. Not only is it 88%, but there's also these highs sitting here. So if we break a swing high, then you start looking for longs. You know, that's like what ICT says, the 4th candle. You know, the 3 candles make the swing, and then the 4th candle, if it breaks that swing high, you start looking for longs. Now, it doesn't mean it's going to go up and keep going straight up. It's going to probably hit the 88%, retrace down, and then it can break out. But yeah, when I trade OTE, I usually, if I want to get in on the 0.75, I'll do stop loss at 88. That's how I use 88.
Oh, okay.
And how do you set up the the -1, -5, -1.5?
Oh, I got you. My swing projections.
How do you have multiple fib settings?
Trading view right here. So I have a whole bunch of different fibs that I can play with. I got an OT that's like all color.
Okay.
There's like a 50% box. These are all fib retracements. There's 50% just the lines. IDR, which is more projecting. Yeah, it's just like templates for our trading view. And then quartz. Always looking at quartz right here. Quartz as in quarters. So those right here, Nasdaq. I don't know what I saw, but yeah, I forgot. I lost it. But yeah, any type of void or gap, you should always draw quarters in there, like page 1. No, because if you were gonna long in here, you would want to long below 50, preferably the lower third, 75. And then this tells you, if we bounce off the 25 or bounce off 50, never even get past 50, this tells you, hey, it's probably going to be a reversal, So quarters is nice, or having the quartz.
Right.
I didn't know you could have separate bids.
Yeah,
Set
that's,
one up.
yeah, and then you use TradingView?
Yeah.
Yeah, templates, man, templates. And I like this guy right here. It's called the parallel channel. You can use it for consolidation. You can use it for fair value gaps, but it's pretty much a rectangle with 50% in there. So it's like, this would be a rectangle. Okay, I see this fair value gap, right? And then busy, so make it green, right? If you use parallel channel, you can do like this, and it would just have the 50%. Let's say you want the 50% to stand out a little bit, Parallel channels are nice.
Nice.
See, yeah, Dixie is still respecting that breaker, so higher, lower prices, indexes until you see Dixie bearish. But right now it's still bullish.
Right.
Just took out another high. I mean, yeah. To the tick. So now we just created equal highs. This is perfect, man. Oh, you got this range, 50% under, looking for longs. This breaker. This is why I love that midnight opening price. This is like key.
Oh,
One of
yeah.
my keys.
Yeah, I see what you're doing there.
It's like to the tick. When you see this to the tick, you know there's going to be a reversal. Oh wow. So this is ES reversing off to the tick of midnight opening price at 10:04 right here, and then Nasdaq does it right now at 10:40, 16 minutes ago, and it went a little bit over. It wasn't an exact tick, but gotta love midnight open. Gotta love it. It's just another thing of confluence, It's like, yeah, there's three things lining up here. There's top of the range, which mitigation block.
Right.
And it's a fractal breaker. I mean, you don't see a breaker here, but this is a low. That's a high. This is a lower low, so it does take out this low. It's fractal.
Yeah.
And on top of the fractal breaker, where this low is, what's the top? Midnight opening price to the tick. Twice. For 2 minutes straight.
Right.
And to create this pretty big imbalance, straight into the H1 inversion for value gap. And then, so if you just drew the 50% of this gap, I mean, and it just lines up with this, and it lines up with midnight opening, that's a nice trade right there. And then you can look at this as original consolidation, because this is consolidation.
Right.
Yep, but I don't know. I took that nice little trade this morning for $94. It's 11 o'clock out, right? And usually log off here, but I don't know, man. I feel like 11 o'clock, 12 o'clock, 1 o'clock is like great trades appear there because it's like slower movement and the range is already there. They already gave you the range to work within.
I usually call at night because I work nights, so when it moves slow, I'm just like, I can't do this. Dragging on. I need quicker action. I'm like, all right, perfect time to go to bed. Took my trade, silver bullet. I'm in and out. On to the next Next one.
Did you catch the silver bullet this morning?
Yeah, I did something wrong and got on the wrong side of it.
Were you trying to long up here? Let's dissect your trade. Where'd you get in?
So I'm trying to open up here.
Look at this. This is like, oh, to the tick. I mean, like, when you see the respect, opening and closing on the 5 inversion for Valley Gap like that.
Right.
Now, I was going to short this, too, once we left this inversion and came back into the 5. Because it was clean. So clean because before price even came down here, like I said, we knew, like, this breaker had to probably get touched, you know, and even if not, this range, 50%, we knew. It wasn't enough risk to reward here for me.
Right.
Because if I would have got out, I would have got out here. My first take profit, 50% of the range, 41.82, then 41.78. But just training your eye to react after these impulse moves, these huge impulse moves, these quick moves. You know, there's liquidity
Inside there, yeah.
Inside there, yeah. So now you're just training to like react to, you know, get back into that range. Or
Yeah. This is awesome.
I've only been studying ICT for 5 months.
Well, you're picking it up really quick, my friend. That's excellent.
Thank you. Yeah, I'm pretty much doing this full time now. I just got out the Navy in March, and my wife's a pharmacist. Appreciate it. So she's just paying the bills now while I just trade every day. I mean, learn from the markets.
Good for you, buddy. I love hearing those. That success story right there. Good for you.
Married her when I was 18.
Oh, nice. Congratulations.
Went off to boot camp 2 weeks after graduated high school. Been married like 9 years now. Yeah, I mean, we've been planning this, and I knew I wanted to trade like this since 2019. So
good for you. Well, I loved it. You're definitely picking it up really well. That's excellent.
Thank you. Yeah, 4 years of her she went to school for 7 years, but her 4 years of grad school was like $205,000 in debt.
Oh my God.
Yeah. So imagine if you put 4 years into ICT.
Yeah.
For free.
Yeah.
That's my mindset. If I can sit here every day and show up and, you know, not rage, then I can take this serious and try to get something out of it.
Exactly. Yeah.
But I was a gas turbine mechanical engineer in the Navy. I have jobs waiting for me for $150K right now, working on trains, engine, any engine on an airplane, helicopter. But I'd rather do this. Like,
well, you certainly have the engineer's mindset. That's for sure.
Yeah,
your attention to detail is amazing.
Thank you.
Yeah, I got to branch out further than the silver bullet.
Oh, so where'd you get in?
Oh, 8 after.
8 after 10?
Yeah, 308. London session.
London session.
Yeah.
Oh, London.
I'll tell you the price.
Were you longing or shorting?
I went short. 6193. 106.193.
106.93. What is
euro?
Euro. I don't even look at the euro. At 308. Like here, he tried to short. 609.
So it'd be 1108. Yeah, it's 106.193. No, 106.323.
106. 323. 6, yeah. So you're all the way up here. You tried to short it. It was like 4 in the morning.
Yep. I think because the Euros had their daylight savings, so I was like, oh, it's 3 o'clock, or at 2 o'clock, I'm like, all right, now it would be 3 o'clock, but I guess they don't really adjust the clocks like that. So I was an hour ahead when I should have just left the time difference alone. I was trying to compensate for their. So I got caught on the wrong side of it there.
I feel like anytime there's clock work like that, or any change in clocks like that, it's just it can be manipulated easily by the banks or institutions.
Yeah.
So you traded. So we broke out of this range and you went short. Pretty much a breakout. At the breakout of this high. Still got this whole range. Let's see. So yeah, I mean, you're shorting in premium. That's good. And you have the H1 order block that was there. I mean, it's really not an order block because it kind of is, since it took this liquidity right here, this high. It's not significant because of the gaps up here.
Yeah.
So you
stuff from the trading view too.
So you thought all this range was not going to get hit?
Yeah.
Look at that. The H1 order block is, oh, it didn't even get hit. But I guarantee if you look at the 4-hour, it's the 4-hour order block now. So why? Do you know why you got in here when it was just skyrocketing up?
No, because I deleted my fucking shit. Sorry, Chris, on your stream.
What about your journal?
What
did you journal?
I didn't journal anything. I don't do that. I'm at work when I'm doing the London, so I don't. Someone walks in, I close everything out.
Yeah,
I gotta let them leave the room. I gotta come back in. So
Yep.
I work at a jail, so.
I just worked corrections 3 years after I did 5 years of sea duty.
Yeah.
I knew it had to be something like that since you work a night shift.
Yeah. So when someone comes in, I'm like, I close everything out.
Yeah, man, screw corrections. Oh my god, screw corrections.
Yeah.
I had no signal at my work.
And I have to connect with a VPN. So like sometimes I'm connecting to Denmark and then Switzerland and this and that, just so I can get internet so I can trade for a little bit of time. So makes
I got you.
A little hard.
We had news today, right? At like 9. Oh, you guys look at the euro, right? So euro had news at 6.
Do you keep all your yellow news events on there as well?
No, just medium impact. That's it. You had 10 a.m. news. This is a tab I use for highs and lows and the midnight open. That's it. So I can just quickly see the last 3 days of highs and lows if I need to, real quick.
You're extremely organized.
No kidding, hey? That's the engineer.
Hey guys,
that's why I asked you last week. I was like, I needed like a color system.
Oh yeah,
Remember when I asked you that last week or 2 weeks ago? I was like, I need more organization. That's where I
Yeah.
think I'm like lacking like big time.
You can see how the paramedic side of me is like, if I see something and I think, oh, that's a killer, you got to react to it. You got to shoot it up with a drug, or you got to shock it, or we don't get much time to engineer a nice little well thought out process like this. We just kind of shock it and drag it into the back of the bus and go.
While I have you here, let me share this indicator with you. This is all an indicator. So, like the highs and lows in midnight open is an indicator, but this indicator is super. I mean, you could do a lot with it. Just if you want to, I don't know. You can play with it, but I can share it. So
What's it called?
how do I share this? Can I share it through the Skype? Like if I copy and paste something,
Yeah.
can you
Yeah,
copy and paste?
I think you
indicators?
can. If you've got the indicator exe file, you can. Yeah.
That just okay. Let me see.
Let me see if that's in there. I don't think that would work.
No, that was just the name of it, right?
What's the name of it? I could.
ICT index futures vertical lines. Yeah, I noticed. If you want to trade, man, you gotta get organized on the charts. Like, I hate being organized on the charts, and it takes a lot of work. But I get so lost because I see everything, and I'm like, so you gotta be organized.
Mm-hmm.
I used to do it every day, the highs and lows, and the opening price, just like ICT tells us to do in like the second episode of month 1 core content. But then this indicator just changed my life. It just does it automatically now. Look at Dixie, lower high, lower high, lower high, lower low, lower low, lower low.
Why can't I see you on here again? I have no idea what the heck is going on here.
No more news for the day. It's not sharing the screen anymore?
No, I don't even have. You still see it?
Yeah. Oh, now I don't. Now it's back.
Just hit a little reset. Did you find the indicator?
Yeah, I got it. Yep.
And yeah, and you're gonna make it. You're gonna put on a brand new layout too. So this layout is gonna have your highs and lows, daily highs and lows, and opening price, midnight opening price, and that's it.
Got it.
Then when you're ready, I can share the settings for the indicator.
Style, join, day of the week, show labels on all lines.
I could show you my trade real quick. This is what I hate about TradingView. If you don't have the tab open, like for a while, like times out.
Oh, really?
Yeah. So I don't know. And then I tried to see if I could fix it, like using Chrome. Like I don't know. They have a setting where it can like constantly refresh in the background, but it didn't work. So I gotta figure that out. So yeah, this is the trade I took.
Okay.
I wanted my first take profit to be right here, but it got here, and I was like, I'll just take it here. I shouldn't have done that. And then 50% here.
You just took 50% of that whole range behind it. Right?
Yeah, from this morning, the whole morning range.
Right.
Yep, 50% out there. You ready for the indicator settings, Kevin?
Sure. All right, what do you got there? Let's see. Pop this window out over to this one. All right, let's see. That's too small.
Darren, have you got into any of the quarterly theory with Dave?
Quarterly theory, like the year breakdown. You mean?
No, it's.
Or you mean like the breaking, like a fair value gap into quarters and wicks into quarters? Is that what you're talking about?
No, it's literally this guy is breaking the whole year down into quarters.
Oh yeah,
to
okay.
3 months, and then it's fractal. So even the days have every hour. Like, he would tell you the whole year. So in like out of the 4 quarters, this is where the manipulation lies, and then it's fractal. So the weekly. Wednesdays, I think, are the manipulation or something like that, or the true opens are Tuesdays, true opens, and then like the true opens for monthly is the second week of the month, and you can go into and do it into like 90-minute cycles and you could do it into micro fractals, and every single hour has a manipulation leg, and then every single 15-minute that can get divided into quarters. So yeah, it's just the theory is the accumulation, manipulation, distribution, right? And then the fourth quarter being either a reversal or a continuation.
Oh, okay.
And then the same thing happens: accumulation, manipulation, distribution. And I haven't really got into it a lot, but I mean, I'm hearing a lot of good things about the quarterly theory, Dave's quarterly theory, and he has an indicator. This is the indicator right here, and let's see. Oh, did you get the settings?
I got them, yeah.
And that was just the first page. I'll go down to right here. I have none of this like checked off. So if you want to see like all the sessions, the Asian session, London session, and because people do that. People mark the Asia high and low, London high and low. Yesterday's New York PM range high and low, and then trade based off like soups off that, or
Yeah, I'm gonna mess with this tonight.
You know how ICT says the accumulation is the Asia phase, manipulation is London phase, and then distribution is New York.
Mm-hmm.
And then you know how I always measure the last leg of manipulation to project swings? So I would measure London ranges. London ranges is the manipulation range. So usually you can get your day, like, you can guess the day high and low just off the London range projections. See, trying to show you. Okay, yeah, this is the indicator this guy made. I only have it on the 90-minute cycles and the microcycles.
Right.
But there's yearly cycles, monthly, weekly, daily cycles, and so the red being manipulation. Let's see. So manipulation, I mean, according to the indicator, is 1:30 in the morning to 3 in the morning, and that's London's open.
Mm-hmm.
And that's another thing. This indicator is like buggy. It would just disappear just like this, randomly.
Oh.
Oh, just like that. So yeah, I mean, definitely worth checking out. I think if you guys ever have time, just check out these orders by Dave, Quarterly Theory, and True Opens, and I'm hearing a lot of success from it. I haven't got into it yet because I want to finish core content first before I
Yeah. It's a good idea.
dabble into that.
I gotta go finish watching the core content. I think I made it to episode 6, and I'm like, he just goes off on a tangent. I can't deal with that. I can't focus. That's why I went and found the silver bullet, and I'm like, that's it. That's my ticket. That's what I'm doing. That's all I'm doing.
There you go. That's all you need.
So,
See this H4 order block on Euro?
where you at here? Oh, all right. I see I'm looking at the. Yep. Go ahead.
You see it?
You can tell I'm fucking tired. Sorry, cursing again on your screen. Yeah.
I'm just showing you something to look at. Like this is, I like this, like big black body candle right there. This one as well. Wow, this is the first time I've ever like really looked at Euro. These runs are crazy. What retrace? We don't need a retrace. What retrace? We just go. I don't need the equilibrium. Dang. Yeah, I mean, I don't think this H4 order block's gonna hold because I mean, it's definitely gonna be a bounce there. I can tell you that. I mean, maybe we got so close to it, but us hitting 50% of this range is very likely.
Of what range did you just?
It was just this range.
Oh, okay.
It's like the London range, 4 a.m. to 6 a.m. right here. Any range you see like prior, like, it should always be measured, because like you'll see it. I mean, I don't know if you've ever tried it, but like this range, 50% of this range, you would see something like we can come up and then use it as like a catapult for price to leave this area. It's like 50% of this range. Any previous ranges is always useful. You'll see price respecting previous ranges a lot. Oh, here it is. So on the NQ, we have a daily fib volume imbalance, and I just put the quarter Fibonacci thing on there, and I saw this. I saw the 15-minute candle come up here, close, and then I saw this big rejection candle exactly at 50% of the daily fib. So that's like.
You're pulling it off of what?
The daily fib, which is daily volume imbalance. Here, I'll show you where it's at.
Oh, yeah, okay.
Yep.
That's that price imbalance there. Okay, I got you.
Yep. So I just put my quarters in there,
Mm-hmm.
measure the 50%, 25, 75, and then I see this on the 15-minute chart. We're just leaving this. So once I see this, like, consequent encouragement has held and we're gonna reject from it, then it's like, how do I make a trade to get from here to here? How do I do that? It's like the struggle. It's like the struggle bus. Because this H1 and
Right.
15-minute fair value gap, and it's just highly likely we're gonna come back into here.
So when you see that return to that order block, you see how it breaks down straight from that 50% straight down and breaks a low. There's like a break in structure slightly on that first
Right
down
here?
candle after the 50%. No, the next one. Yeah, the higher one there. That first break below structure there, and then the return back into. So you'll see a fair value gap it creates, and it literally comes up, taps it, and you get short there. You see that? It comes up and just taps that fair value gap there. Then you start to drive down, and you reach for your objectives that you got down low.
Look at this, and like these are equal highs created at 8:35, 9:05, right here, equal as highs. Wow. So it's equal highs for a 5-minute chart, and it's just a swing high for a 15-minute chart.
Mm-hmm.
And
that's a nice little break in structure there. As soon as you see it, if you saw that 50% was your key to say, okay, well, you've keyed off of the consequent encroachment of that price imbalance on the higher time frame. And as soon as you break structure on the downside in that 15-minute, the one you actually saw the bounce off the 50% there, as soon as it breaks that consequent or the swing low there, right there,
yeah,
and then as soon as it creates that fair value gap and you come back into it, that's where you get short. So right at the opening or the bottom of it, or even the midpoint of that.
Or even the retouch of the daily VIB.
Yeah.
Because we came into the daily VIB 50%. On a 5-minute, it looks like, hey, it wants to come up, but no. And once we left it, that can be used as an inversion.
Yeah, yeah.
I mean, yeah, 3 things line up. 50%, we're bouncing off of it. Yeah, low resistance liquidity below. That's 2 things. 3, fair value gap. 4th, market structure shift, bearish.
Yeah.
And 5th thing I'm seeing here now is we have the 3 soldiers, or the 3
the 3 Indians. The 3 Indians.
The 3 Indians. Yeah. So into liquidity. So that would have been a nice trade. Yeah.
Yeah. That's good. You journal that.
Yep.
Yeah,
we
I
never
like that.
touched 50% of this range. Just noting that.
But see,
maybe we did somewhere.
Yeah, but you see, you'd be aiming. I don't know about you, but I'd be scaling out at the next fractal low, below the that first break in market structure. You go to your next fractal low, then the next fractal low, and the next fractal low. You take out percentages on the way down, so that would have been 1, 2, 3, at least 30% or 50% or more. Once you break that old low, that small range you just went up, that leg you went up, yeah, you start taking those fractals out below the swing points. And you would have, and you would have cleaned out all the way down, even if you took out 20% per fractal swing point all the way down. And then as soon as you break that low, then that's quite a sizable return on your, that's what, the 30, 40 handles there or something.
Yeah. I would have saw this. I would have saw, oh, look, we have an H1 fair value gap below 50%. Let me take most off there, or try to long that.
Yeah.
But I never want to long. I mean, like, this just looks like it wanted to get hit. I don't know. This imbalance.
Yeah.
This is a fractal breaker. But I mean, it's not really the breaker I would like, because the breaker I would like takes out this low.
Right.
Got like a low, and then the lower low went below this, then that's more trustworthy. And then now looking at the 5-minute breaker, you can see the bodies are respecting it.
Yeah.
Wick's doing the damage.
Exactly.
Then bounce off this 5-minute order block.
Fill in that fair value gap there. Yep.
Yeah, and like before I run up, you still have the equal highs right here.
Oh yeah.
The equal highs never got hit. It tried at 9:30, but fell short. So, I mean, that's a trade in itself. It's like coming off a breaker. Coming off a breaker with the 5-minute order block right there. Yeah, to these equal highs.
And you see it at 10 o'clock there, how it takes out the low. Usually when you see it take out a low, you take the first fair value gap that you see after the low is taken out at 10 o'clock. That's your silver bullet setup, right? So 10 o'clock usually runs a high or a low.
Talking about right here?
Yeah. That low is, well, the previous, like at the 2 a.m., I guess London low there.
Gotcha.
It takes that low out. And then as soon as that low is taken out, that's your turtle soup. And then you look for, on the 1 minute, the fractal or the silver bullet setup after 10 o'clock. And usually around 10, about 10, 12, you'll see the fractal setup. So
you see how we have the low here, high, and then the lower low is the one that takes out the London Open range. I mean, that's perfect right there. Like, but would your breaker be this guy right here? Because he's the biggest black candle, biggest body. Would you say it's this one, or would you say it's? Yeah, I mean, where would you put the breaker here? Because all I see is this consolidation, so to find the top of the breaker is kind of hard here. I mean, would you implement this wick as well? All the way up to this wick?
Well, you've got a combination. Remember when Michael adds all three candles together? So if you're looking at the lowest black down closed candle, and then there's another one next to it and another one next to that. So take your those three candles there, add them together. That becomes your, what is that, 15? What time frame are you on there?
This is a 01.
So that'll be your 3-minute breaker right there. It's the parent breaker of that whole run up. So you see how it returns back into it? Or you look at the bullish breaker on the 1 minute.
Oh yeah, you go down to a 3-minute, you can just see the size of this thing is.
It's just a monster.
It's a monster bearish breaker. I mean, bearish order block. No wonder we bounced off of it.
Right.
Then you got this one. I mean, yeah. So this consolidation is such a good place to.
And usually it comes back and tabs the top of the consolidation or 50% of the consolidation. You pull your fib tool from the top to the bottom and you hit 50%, and that's where it can come back into 50% of the consolidation before reversing. In this case it wasn't. It was just touches the top of the bodies. You see how the bodies respect the bodies?
Yep. So let's see if this would have been a long, using the M5 order block, stop loss below here to take out equal highs.
Mm-hmm.
It's almost 4-1 in 14 minutes.
Great way to get paid. 14 minutes work. Your wife comes home, you say, I made couple of $1,000 today, 14 minutes. I've been eating bonbons and watching TV all day, but I made my money. How hard did you work?
Oh yeah, man. Poor girl, man. She's getting screamed at by crackheads all day.
Oh my God, I feel bad for her. That's a
Yeah,
tough
I don't know if
job.
you've seen the news. It's really bad right now for pharmacy. They're doing walkouts, and Rite Aid just went bankrupt.
I can't understand how people are just walking into these shops and walking out with carts full of groceries and nobody's stopping them. Like they're just. It's shocking.
Yeah, because it's the same reason why nowadays, if you see someone running down the street and you see a police officer chasing them, I mean, you're not supposed to get in between that because you never know if the guy is gonna mess you up or not.
Exactly.
Shoot you to defend himself. So.
Yeah, it's crazy.
Yeah, Walmart's losing trillions to fraud, theft.
Yeah, see
Or I think
people
it was
walking
billions.
in. We're watching these reels of people just walking in with carts, filling them up, and just walking out.
Yeah.
Wow.
I feel stupid every time I actually pay for something.
You know what I'm saying?
Exactly. It's like, aren't you just giving this away yesterday?
And I think it's in. What the? What is this? Oh, okay. I was looking at this 15 plus order block lining up with the bottom of the H1 Fair Value Gap. I was like, oh, this looks good, but that wouldn't have been good. Kevin, you saw the swing projections I was talking about with ES this morning?
I did not. I think I joined a little late there.
I'll show you real quick. Oh wow! Look at your. Did you see Euro acting with that H4 order block? 1 minute chart.
It's like dragging its feet.
Yeah, I mean, and there's low resistance liquidity, but we don't know if it's going to keep going down to this green line before going up. But that's a bearish market structure shift, right?
Yeah.
Or no? I mean, yeah. I mean, this is a swing low, but but it's just returning into a imbalance.
Well, you want to see what have you got? 4 hours? Yeah, you want to see
4 hour.
The next 4 hours. Just hold off there and come back and just tag that. Like if we close below that break-in market structure there, if we close on the 4 hours at this point, and then the next 4 hours we reverse, get back into that. That could be your following 4 hours would be your fair value gap returning inside of a breaker. Hit that breaker and then you're going to short that again.
That's right. Yeah, this is the breaker.
So that would become the breaker, and then you just hold off on that. So you got the next 4 to 8 hours to see whether or not that breaker gets hit again, or if we just wick all the way back into that range and you don't get a fair value gap. You want to see this close below that low, a full body close, and then the next candle open up, wick up, hit that breaker, and then start pulling away again and filling in the rest of that fair value gap below. Yeah.
I got you. Yeah, that imbalance.
Yeah. But if Kevin doesn't like to wait for slow candles, that would be pretty painful, man. That's an 8 hour slow one for him. He's gone through a whole shift waiting for that to happen.
All right, Kevin, you watching?
Sleep through it.
Kevin, do you see my screen?
Yep.
I got yes. All right, real quick, I'm gonna show you the projection I did this morning. So 1 minute chart, right? I got this little projection right here. this is the last leg of manipulation that took out this low right here. And on 1 minute, it doesn't look like much, but on a 15-second chart, it's a whole leg. It's a 15-minute chart. Yeah. So here's that same leg down that took out this low right here. This is our soup. So I just measured the low to the high to get my -4 standard deviation. There. And then once we took out this high, or oh, we didn't take out the high.
No, right into the rejection block there in the wick.
Yeah, and I mean, it didn't even hit the 50%. I think maybe it did to the tick.
Yeah.
No, not even.
Just short of it.
Yeah, and then like that. This can trip up a trader to go long because you have equal highs, and it's like, oh, 50% of the premium wick didn't get hit, so let me try to go long down here to try to get it back up there. But that's not good because if you ever wanted a long in here, you would need to buy
down to
below
50%. Yeah.
Yep. And then I drew this out because this was some not low resistance, but like lower time frame liquidity taken this swing high right here.
Mm-hmm.
So this manipulation leg high to low, and then dang, what chart was I using that? I had an inversion fair value gap lining exactly up with the 50%, and then you can just see what price does there. So the fact that we never hit the 2 shows bullishness.
Mm-hmm. Well, we came back into the top of that consolidation again, right? And that's where you get the like if you look at this, you come down to the next one. Yeah.
This consolidation or this consolidation?
The lower one. Yeah. We come into the top of that, back into that order block, the big propulsion candle you see there.
Mm-hmm.
Come over a little more to your right. Yeah, now go up. Right there, that big propulsion candle there. You came back inside that. Also the top, the breaker is hit on the opposite side. So come all the way back to your left there in the middle. No. Come all the way down to the top of the consolidation there. There's a breaker in there. Right there.
Oh, okay.
I'll come over a bit more to the one you just outlined. Come over right there. Go to the top. Top. Right there. That's your breaker. You trade back into that. That bullish candle up top there. Yeah, now drag that one all the way over. Boom.
Yep.
That's your breaker returns to and then leaves town. Now, once you see that, if it keys off of that breaker, you wait for the next setup. So you can, if you weren't absolutely sure about that, you'd say, okay, now I wait for price to break market structure to the upside again, and you'll see it just, I think there's a fair value gap that forms just on the other side of that where you start to see it run back up again. Yeah, right in here. Yeah, so right as that first, you'll see a first little fair value gap starting. You see that?
Yeah.
Where is it? Yeah. So at what time frame are you on there? 1 minute?
Yeah, I went to a 1 minute.
Yeah, if you go to the 30-second again, you'll probably see a nice little fair value gap set up in there.
Yep.
And then you, right to the order block return, tag to the top of the breaker, and then left. But I don't trade 30 seconds, so I wouldn't have seen it anyway.
So this is a breaker because low, high, lower, low, and the strength past it.
Mm-hmm.
And look at that.
Yeah.
Look at that.
And then just clean out the highs as it goes up. You take out fractal highs, unload percentage as you go up. Each fractal high, you take a percentage off.
Literally what I'm seeing right now, like what I just drew in this breaker is literally what the Dixie's doing on the hourly time frame. Because this is like, oh, we should get a retrace because we have all this openness,
Right.
but it's like you can't ignore this price swing right here. How it closed above this high with the the body closed above it, you can't ignore it.
Right.
If the body closed like below the swing high, then I probably wouldn't take the trade off this breaker.
Yeah.
Right?
You and me both, man. I like to see bodies break these highs, not just wicks.
Yeah, the body's closing above wicks.
Yeah.
Okay, good. Just more like, let's look at what the Dixie's doing. Oh, yeah, so it respected it. Oh no, but look what we're doing. Let it load. Dixie's going up and index is just consolidating. Consolidating or building orders to dump?
Yeah. They're booking both sides of the equation there.
Okay, finally loaded, because I haven't loaded this chart up for a minute. So yeah, this is the same thing.
Yeah,
huge.
See a body breaks above it. We wick back down into the breaker again, and then boom. Yeah, that's classic where the body breaks up your close above the high, right? Then the next kind of opens, comes back to the breaker, and then leaves. That's nice.
For me to like start going long, like I said, I wanted us to go below this breaker or this 15-minute fair value gap and inverse it, and then I can start looking for longs for NASDAQ, NQ, targeting,
right.
Dixie's run into here. But I'm just happy I recognized that we were in a breaker. And I am just happy I recognized that this liquidity down here didn't have to get hit because the breaker's just stronger.
It's stronger in the price support. Yeah, I didn't see that.
Yep.
Good call, Joey.
Thank you. At 10:15, I would have been looking for, like, let's say if I knew ahead of time, like, oh, I've seen this breaker's gonna hold. Oh, we're gonna, bounce off this breaker at 10:15. Let's see what ES or NASDAQ was doing at 10:15. To look for a short, you would have got slapped. I mean, no. This is the only run that you could have profited from it. This is 10:15 right up here. So yeah, I mean, this is NASDAQ hitting 70.
Oh, the 79% retracement. Yeah.
That's 75. Yeah. So. Dixie is hitting the bottom of the breaker again to go up is your idea. So then you're like, okay, I'm looking for shorts, and this would have been actually a good area to short because you have this. Yeah, we already talked about this. The breaker had to get retouched. So and you're hitting the 70%. So Darren, you don't ever sit here like the whole 8 hours, right?
No, usually it's just the morning session.
Okay. Oh, real quick, while I have you guys here, Kevin, are you watching, my friend?
I'm here. I'm usually just quiet. I just kind of.
Have you ever dabbled into Notion?
No.
It's
For
free.
journaling?
Yeah, it's free. It's
Yeah,
the only reason why I'll tell you to do it. I can share this with you if I figure it out. But inside of this, I'm creating like my own models, right? So inside of here, future models. The CAM 30-second model, I only got like one example of it. So this is like a good way to journal. You got the daily, weekly, monthly raid, and once it raids, just looking for the internal H1 for value gap. I haven't did any back testing on that yet. Six Sister OTE. This is my bread and butter. Like my bread and butter. This is it. So I draw OTE out, and where you're seeing the OTE is probably like in a weird spot because I could probably have it on like on a M5 bodies, and then you look into a 1 minute chart and it looks like this. But if I see one hitting 62 and I see one almost running the highs at the same time,
Right.
that's Six Sister OTE right there. I love to see it. Here it looks like I got in because ES hit 50% for the first time, so I got in right there. And then I don't know why I held all the way down here, but I did. That's just one example of the models. You know, so yeah, you got models in here. You can journal. The proficient trader routine that I created that I'm having a hard time following. It's just a little schedule thing. Down here, I can go into like my classes. So ICT precision trading concepts 1 through 3. You know, I can go and look at my notes for episode 1. This is when he's talking about 9 and 18 EMAs on the weekly charts.
Are you just screen capturing those?
Yeah, just screen capturing, pasting them inside, and just putting notes.
I love that.
them.
What's it called?
This is called Notion.
Notion. Let me have a look at that.
Yeah, and you can make this look however you want. It's crazy. Forecasting. So before every day or whatever, you know, your nightly homework, you can just take a picture, and you know, I like to do like arrows like this,
Yeah,
and then I'll come
I
back
like to doing those too.
at the end of the day and be like, okay, this is what happened, and then little note. I knew where the draw liquidity was, that daily plus fair value gap. So right here. What did I write? But was wrong how we got there. We were very bearish and never went up to take out any buy-side liquidity or retrace to 50%. 4-hour inversion fair value gap kept us down. This guy right here. Just little notes I'd be taking. What else? What else do I have on here? So I used to do all my journaling on Discord, and just that's a mess.
So it's called NOTION.
TION. Yep.
I got a for personal use.
Yeah, you can do it for budgeting, finances, daily routines. It's crazy the stuff you could do there, and you know, most of the stuff I do, I do like templates. You find templates on Google for free, and you can just like copy and paste them in, and then you know tweak it however you want. These are journals for my trading journal.
I love it. It's clean.
End of day reviews. Yeah, it's clean. It's super clean. And then down here, you can go down to the educational content. Like, and this is like from someone else. I don't know where they got it, but there's so much in here. There's, yeah, so much. And these are all Notion pages. So the Inner Circle notebook. I don't even know what it is. I'll do it later. But yeah, a lot of information that came with this.
Have I said you were organized before?
Yeah.
There's
Yeah,
an
I'm trying.
engineer for you.
Yeah, I'm trying to be organized. Here I started doing the weekly profiles starting from August 7th, and then I was working my way towards now, but I need to get back to it, and like looking at the weekly, like what news events were in this week. So I can look at this week and be like, oh, CPI, PPI was in this week, and then here's the weekly profile. Hey, that's simple.
It is.
It literally is. That's the simplicity of it. And then, you know, I can put where was the weekly draw of liquidity, 1 hour, negative fair value gap. Or low of the week, Sunday. High of the week. Look at that,
Oh,
London.
yeah, okay.
Or not even London, Monday. And then like heavy news weeks like this. See this? I messed up this because I don't even know what's time frame this is, but this looks like a daily. Oh yeah, it says daily chart. Duh. So then, label Monday, Tuesday, Wednesday. Then I like put these red lines exactly where news came out.
Right.
And so then you can see, like, was it a soup, or did unemployment claims get us below an old low or an old high, or non-farm payroll? What did it do? So hopefully I just continue doing this, and then in the future I could just type in NFP and look at all the NFP examples, real quick.
Right.
Skim over it before the day starts or something like that. I get even more organized. Well, I don't know. You guys ever heard of Edgewonk?
Edgewonk? Yes, I have heard of them.
Yeah, so when I'm done at the end of the day, I literally just copy and paste my TradeOvate orders, and I just paste it into here, and it automatically journals all my trades. Now, it doesn't journal it as in like what I need to be journaled, but like the P&L gets journaled, how many trades gets journaled.
How long you held it for, and all that kind of stuff, right?
Yeah, so if you want like more information, like the picture, or you want to, dissect it into, they have entry comments, exit comments. I can put on like which PD array I saw, and over time I'm going to be able to, go to custom comment 6 and look at any of the 30-second fair value gaps and be like, okay, let's go look at 30-second fair value gaps, and I can have like 100 examples or something.
Right.
So yeah, I just like Edgewonk because it's integrated with the TradeOvate. If it didn't have integration, like so I can automatically input my trades, then I probably wouldn't have it. Some days I'm taking 8 trades, which is bad, very bad, but I feel very unmotivated to input all 8 entrants and exits of the trade and idea per trade, and like I look at 10 things before I take one trade, so 8 trades, I have to explain 80 things.
Right.
So Edgewonk just makes it a little bit easier. That's all I got to share with y'all. I paid like $100 or $150 for the whole year for Edgewonk, and then this Notion thing is free, $99. And I'm working on the monthly content here, and then so core content 1, and inside of this you have all 8 episodes. So 1, talking about expansion, retracement, all that.
Right.
Good. Yeah. So I'm planning to do month 1 through month 12 in here. These came with it. These are all trash. I'll be renaming those.
Right.
Put my wife on there. Put 1 Peter 5, casting all your care upon him, for he careth for you.
Love it.
That's it, man. You can do tape reading, like how we're doing this morning, like all the tape reading and the projection swings and the breaker, like the Dixie breaker. Like, I'm just gonna document it. No. Let's see, do my first one. That's it. Dixie respecting higher time frame plus breaker gave us the idea we were not ready to take any longs on NQ or S&P.
Right.
You know, I've been trading a while in options and penny stocks, and I've never been profitable. I mean, I was like a break-even trader trading Apple and AMD in like the beginning of 2021.
Right.
And then I got into options, and man, if blew multiple. I mean, I never blew an account because I had a lot of equity, but if talking like on a small term trader, I probably blew like 100 accounts.
Mm-hmm.
And I never journaled. Never. I mean, I journaled, but I never journaled like this. I never really like put the time into it, and I believe this is the only way to get there.
Yeah, you got to journal.
4 years later, like I realized that. Yeah. And it's not always gonna be like this, though. That's the good part. Like, we're gonna learn a lot, and then, you know, there's gonna be a time where we don't even need to journal. We just know.
You just know it to see it.
Yep.
Now, when you click your, I've just got my, I just downloaded that Notion itself. So you have to go into, because your setup's totally different. It says getting started. Here's the basics. Click anywhere to just start typing. So you just create your own templates, or you grab templates from the outside, or you've got routine and model there. Those are just file folders that you're creating.
Yes. So all this routine, models, charts, journals was a template I got, like this whole thing, and then inside of it is where I would do like the journaling, or I would do the tweaking, and like everything inside of everything is editable. You can edit.
Oh yeah, okay.
Yeah. So just the world is yours when it comes to this. Like however you think you need it is how you can have it. Everything's adjustable.
Right. And when you get your templates, you go to any specific place to grab templates?
I just Google. There's a lot of ICT notions. So you just type in ICT Notion. All these people that have studied ICT, they have notions already. I can share this one with you guys.
Oh, you'd have to Google it. You can't just get it from inside the search bar here.
Yeah, you can. Yeah, you can. Yeah, they have so many things, so many templates. Yeah. Look at the trade that presented itself with ES just taking out yesterday's high.
Oh yeah.
In the same 15 minutes that ES hit the high of yesterday's high, actually no, would have been right here. ES hit yesterday's high. All right, yeah, right here. And the Dixie was bottoming. It already created its low. NASDAQ inside day.
Oh, that's neat how you can get all your screens to move at the same time.
Where in Notion?
Wherever you're.
Oh, in TradingView?
Yeah, that's neat. I clearly can't do that in MT5.
Yes, it's right here. I can make all the symbols on all 4 charts the same interval as in the minute of the chart. So if I put 5 minutes and this is on, all of them are going to go to 5 minutes. Crosshair, so I can see the crosshair on all 4 charts at the same time. Time, as in wherever I click on a chart, they're going to all go to that same time.
Right.
And then data range is what you're seeing here. Is like the data range I'm seeing here will be shared on all 4.
Oh, that's cool. I think I'm gonna have to try start learning this
Trading view.
trading view.
Yeah, it's neat. I came over from Thinkorswim.
Ah, okay. Yeah, we couldn't get Thinkorswim up here in Canada. I tried to get that.
What about nowadays that Charles Schwab owns it? They bought him out.
Oh, did they?
Yeah, it was like maybe like a year and a half ago or so they did.
Yeah, I think that's when they started saying we can't get it in Canada. Yeah, I think there's one little loophole you can get. If you have to have a $25,000 American account, you have to hold a balance of $25,000 in order to get it.
Oh, okay. You guys have PDT rule in Canada?
What's that?
Pattern day trader rule. You cannot take more than 3 day trades within 5 trading business days if your account is under 25 grand.
Oh no, not that I know of.
Yeah, we have that rule. It sucks. Like, the first year of trading was horrible because I had to deal with that rule. It's like, because you can only take 3 trades in 5 business days. So it's like,
Oh wow.
and as a beginning trader, you're like, I don't know where to get in and out, and in and out real quick. Oh my God, there's 1 trade gone. In and out real quick. Oh my God, I only got 1 trade for the next 4 days. What am I gonna do? You know, it's horrible.
Right.
So that's why people trade options.
Exactly. Yeah, that's
To
what I
get
was
around
into
the
for a
PDT
while.
rule. That's why Americans love options. Nobody, but not a lot of people have 25,000 of equity in their account. And then as soon as you have that 25,000 equity, they give you free margin to trade with.
Yeah.
Thinkorswim. Yeah.
I'm gonna have to start playing with that Thinkorswim or that Notion, and I like this trading view too. I like the fact that you can get all those 4 different screens up at the same time.
I'm not doing the Notion thing at work tonight, but I will be doing my trading view to set up multiple Fibonacci settings and a bunch of other stuff.
These are all the templates they have for trading view.
Now you have to pay for trading view, do you not?
Yeah.
There's a free version, but I think it's delayed by like 10 or 15 seconds.
Right.
But you can still do the
No,
charting and everything.
the free version isn't delayed, I think.
I thought the free version
Yeah,
was.
I think it's like delayed by there's quite a sizable amount of difference between the free version.
If you pay for the data, I think it's like $3 a month for
Oh, okay.
Oh, okay.
$4 a month, yeah. But for what I'm paying here, it's like $50 a month because I got the pro plan. So
Right.
I can go look at the 1 second chart if I wanted to. Which
I got 300 days left on my premium plan.
yeah, man. And TradingView, they have great deals sometimes. So
And then can you hook in your different like brokers and stuff like that through here?
oh yeah,
Yep,
yeah.
yep,
So
yep.
here's all the brokers so you can. Here's all the brokers.
Oh wow, that's quite a lot.
Yep.
And then if you to get around that, you could just sign up for one of those brokers like Oanda, and if you have a trade copier, just make Oanda your main account, and it could send off to your other brokers
Oh yeah.
in case that broker that you your main broker doesn't,
Support trading view.
Right.
Yeah.
Yep.
So that's a way around that.
What is Dixie trying to do right now?
Look at that breaker over it, way over on the left-hand side there. Up high. Come over right there, yeah. That little guy at the top there. Watch for that to see if we trade up into the body of that. So you got the low, the open, and the threshold of that breaker. You might be just running these highs here and look for the threshold. If that doesn't hold price and the reversal happen, and you start to blow through that, then run for the highs. Or the rejection block and then the highs.
Yeah, I definitely think this is we're just going to run these highs. We also have the 15-minute bearish order block. So it's like highs with an order block.
Yeah. That order block is that break. That's the breaker right there.
Oh, that is the breaker.
Yeah. So if you look at the breaker as, if you run up into the body of that now, the open of that breaker, that would be a place for support, and also the threshold. And if you lose the threshold, then you look at the rejection block. And if you lose the rejection block, then run for the highs. But right now they're just going to clean. If they clean that out, you could be pushing right into that body, that open.
Let's see where.
Or they're giving you one pipette above it.
I do like this order block, but look, we already respected it once.
Mm-hmm.
So for us to come back a second time.
That's why I say the body is the open is your next level of.
You're right there. And there is a little volume imbalance in here as well.
Yeah, little tiny guy.
Yep, that we never touched.
Thanks for sharing. Love the 1 Peter 5 edition. Yet TradingView is so powerful that doesn't appear. Futures chart. Don't buy TV until around Thanksgiving in the U.S. Late November. They provide it for about 50%. Oh, so don't buy TradingView until Thanksgiving. Last November,
Well,
they had like 50%.
Yeah, don't buy TradingView until there's a huge discount because they run them a lot.
Yeah, he says, Derek, well, thanks for that, Derek. He says, late November, they provide about a 50%, then great discount. Dixie's interested in taking out the highs, yeah.
She took them. She took them already.
Yeah.
With the hourly over here.
Yeah, TradingView. I bought mine August 25th, 60% discount. So they do hefty discounts for the yearly.
This is where I like to go down to a 15 or 30-second chart after a higher time frame, higher low has been taken.
Yeah.
Yeah, so then I can just look for, like, so if this is the swing low, and then we break the swing low, then I can... As soon as I see a swing low, or us create that, like, and then look at this. This is low resistance liquidity right here.
Yeah.
So now we're just, like, we're souping. This is definitely a soup. And this is a breaker. I probably won't hold. So here's that 15-minute volume imbalance.
Yeah.
We can also touch the daily inversion for value gap to the tick, and then stop there. and we're hitting it.
All right. Yeah, we're coming back into a, on the NASDAQ, we're coming back into a breaker.
Also, another thing I love about TradingView, that so this is my 1 minute chart right here, but my 15 minute is up here, and it's just looking a little cluttered, right?
Mhm.
So I can just go here, and inside of each one of them, you can change the visibility, right? And I would go and be like, you know, maybe I don't want the hour, like I don't want it to show it on the weeks, days, and hours, right? But what I found is even quicker. You just right click it, and then you have 4 options right here: current interval and above, current interval and below, all intervals, or current interval only. And as soon as I click that, it gets taken off all of my charts except the 1 minute chart. Just for a quick little cleanup. So this is some old sell-side liquidity I must have... Why is this here?
That's that price imbalance from...
Yeah, from this gap.
Yeah.
Usually I'll leave an old SSL drawing on the chart if it's like a significant low. Which it should have been this... there. 10 a.m. low. Yeah, 10 a.m. low on a Wednesday. I just noticed, yeah, we had a bullish market structure shift on ES. Right? Because we have this low, high, lower low, and then this body closed above this like high.
Yeah, it
This
came
is a
right
4-hour
right
chart.
back to the breaker, hit it right on the money. Look at the hourly breaker.
Hourly breaker. Oh yeah.
It hit it perfect there. See that? Right. You got little dotted lines right across it. The breakers. It hit it nice right on the
prices.
That bearish breaker on the bottom there.
On the hourly?
Yeah, go to the hourly. You see that last run down, that last leg down? It hit that dotted line you've got sitting right there. That little last down close candle before the run above the old highs. You just see the wicks came right down. And nope, go up to the last leg that came down. Yeah, right into there.
Last leg.
This last one that we're just working on right now, this candle that was coming down right now.
Yeah.
Now look at the couple of candles before that. It came right down to the top of the breaker at the very bottom there of that leg up, like at 31. Do you see that? So yeah, watch that. As that, those 3 big down candles you got there. Yeah, that's the guy right there. That's the breaker. It hit right off of it. We cleaned out the high, and now he had a nice reaction back into the mitigation block, and now we're back into the middle of that range that's just been created now. So
That's why every morning I always put my
that's it right
order
there.
blocks in.
Yeah.
But this is just showing, bullish tendencies alone because this order block, the last down close candle before this huge move up, we didn't even touch 50%.
When you
Of the
see
bodies.
that the one you're using right there is actually inside the bigger one next to it. That's the bigger one next to it. It's the one you should be using because the body's actually below. It's the lowest body candle before the run above. So that is the big
Gotcha.
parent one right there. That other one you were looking at is actually engulfed inside that one. So you have to use the bigger one with the lower body.
Ah, got you.
So it's huge. See that?
Yeah, it's huge. And we didn't even touch 50%.
Well, take the bodies. So here's another thing you're going to learn in your thing there. Now just draw a fib tool from the body, and I'll see where the 50% sits.
Right there.
Bang, right on it.
And it could be like this order block too, you know?
Yeah.
Oof, what a nice trade. Yeah, I forgot I took that trade off the H1 order block. Where's my midnight price? Did I delete it? Because I know midnight used to be there. Oh, another thing I have is a template just for new week opening gaps. For everything I chart, ES, Dixie, NASDAQ. And I just realized that you can copy and paste new week opening gaps from one chart to another.
Oh, really?
Yeah, so where is here's the low. Where's the new week opening gap high? Yep. Now I got too much going on. Control delete everything. Start over. Where's my new week opening? Oh, okay. So we're just above it. So in TradingView, you can control, click, and then drag to grab multiple drawings at the same time. Like that. I could just press Control Copy, and then go to my new week opening gap chart, go to ES, press Paste, and it pasted right here.
Oh, cool.
Save that. It's supposed to be vice versa, where I'm supposed to be grabbing the new week opening gaps off that chart and then putting them into here. But I didn't put 1029 yet on those. Just consolidating now.
Mm-hmm.
Consolidating.
Well, now you want to see it getting on top of that. All right, now it's sitting on top of the, let me just look at this one. There's a fair value gap on the hourly on ES, and we've got above it. We're coming back on. We're finding support inside that now. So if we keep on the top of this one and start to run back up again, that has to provide some support there now on that hourly fair
This
value
one?
gap.
The one we already broke down once on?
We've already broke through it once, come back up through it again, and now we tagged
now
the
we're
top of
inverse,
it
yeah.
once, and now we're gonna, you want to see it kind of hold there off of that now.
And look at that.
Right off the 50% of it.
Right off the 50%. Yeah,
So
there's
now-
a lot
Yeah,
in here.
15 minutes. Let me see what I got there.
Let's see what the Dixies. All right, so
It did pull
Back
off
on the
that body then, hey? It hit the
Yeah.
body there.
literally the 15 minute volume imbalance to the tick. I mean the body. This is 15-second chart.
Yeah,
Down to the low resistance liquidity.
exactly.
I mean down to the breaker.
Yeah. Yeah, that's exactly what we were calling. Yeah.
Yep. So now I won't look for any longs until we can break this swing low. I mean, this was a swing low broken, but I don't know. Doesn't look. This is a 15-second chart, you know. So right here, there is no swing low. No 1 minute, you know.
Right.
Did you always trade on the 15-second, or did you work your way like down from like 5 to 3, 1, 30-second to 15?
I love the 1 minute. I just use the 15-second to see what the algorithm is doing. Because like I'll go to a 1 minute chart and be like, oh, look at the 15-minute order block or the volume imbalance. It was perfect. But I wanna, like, I'm so curious. I wanna go into the 15-second and see this. Like, this is what I love to see. No, like that's another thing is
where it opens right on there. You mean?
When it opens right on there and
Pulls
sells
away.
off from there, right? Like you're not gonna be able to see that on a 1 minute chart.
No.
30-second, you see it. 30 seconds clean. 5-second. 5-second, we went above it just for 5 seconds. 1 second. Oh man, Dixie doesn't even print at the 1 second. I mean it does, but it's just
Oh,
it
man.
looks like this. What the heck is this?
That's fleas, man. That's fleas. Fleas on a dog.
Yeah, exactly. Yeah, so we're still bullish until. And I'll tell you guys, the best trades I take off NASDAQ or SPY, it's when I have a market structure shift on the Dixie. Because the market structure shift on the Dixie is going to come earlier than the actual play needs to come for like ES or NASDAQ. Like this will happen first before NASDAQ or ES has the market structure shift, you know, or vice versa.
Right.
I like this though. I like that we're rejecting off. I have old buy side liquidity just marked there, so it was just the Friday's high. The Friday's high, that's that. So this is what, you know, this is low key 2022 model.
It
Go
is.
up
It is. Yeah.
past it, create a swing low, go up to reject the actual buy side liquidity, and then should sell off, but we'll see. Yeah, Dixie on the 30-second, it can get, it's a lot because you have all these gaps. You can see all the gaps. Let's see, at 12:14, Dixie was hitting that volume imbalance. 12:14. Was there any longs we could have took at 12:14? I close some of these. Close. 12:14. No, we were going down hard at 12:14. I mean, ES hit the breaker high while Dixie was hitting that volume imbalance high at the same time. So, did it get 5 points? Yes. Oh, nope, it hasn't yet. You think anybody trades like this? 5 points up, 5 points down, 1-1 all day?
Yeah. Not very often.
Kevin, were you here when I was explaining this this trade right here with the five inversion for value gap?
From this morning or just?
Yeah, this morning. Did you see this?
When did you go over that one? Which one is? Yeah, that was a couple minutes ago, wasn't it?
It was like when I first started. It was, yeah, at the beginning of the call.
Oh no.
I had said.
Yeah, when you said you were jumping on, I jumped on as well.
Oh, okay, yeah. So you saw this, the low resistance, and then us leaving the 5 to come back in, and then to fill this in.
Yeah.
Yeah, this is perfect. Just beautiful. If something doesn't have a label, I delete it. This is ugly, man. Ugly price.
Mm-hmm.
So what does he teach us? He teaches us we need to run lunch highs and lows. Lunch just ended, right? 12:30. We're going into the 1 p.m. macro.
Yeah.
This is so weird. I know I had my midnight open, and then it just disappeared. So with TradingView, this little button on the left, any new drawings I'm making here can either just sync to this one layout or sync to all my layouts, like all my loadouts. And I think if I set it on the global one where it sets them on all the charts, if I delete it, then it deletes them on all the charts.
All right.
Yeah, I think I just figured that out. Dixie, back to the 15 volume imbalance, to the tick.
Yep.
I mean, it looks like Dixie needs a retracement.
Yeah, they got a ton of liquidity there.
This little indicator tells you, so we're in the manipulation phase now. 12:23 to 12:45 is manipulation.
Wow, it's right to the threshold of that breaker right now on the 1 minute.
On ES?
On NASDAQ. Go to the 1 minute. right on the threshold.
Right here.
Yeah.
The question is, does this swing high hold, or is this the lower high?
Mm-hmm. You're on the 5, eh?
Oh, another thing cool about TradingView is, you can, like, if I got some like buy side liquidity sitting here, I can put this in there, like a little loading symbol. You know, turn it black, whatever, turn it pink. You know, it's got a whole bunch of
Right.
reverse it. You know, like loading signs. You know, they have all these things in here. Bad trade, sad face. The magnet. About to go down. And then it actually has like emojis.
All right.
And stickers. Yeah.
Wow.
You want Elon Musk's face there. Oh, another cool thing I can do is so for example news, right? So let's just say Wednesday. I can go like this. Copy and paste, and right here on my chart, I can have a picture of where the news is. Just
Oh, yeah. I like that. It's cool.
yeah. I mean, it doesn't have to be the news. It could be anything. You know, just any image. You just want to copy and paste it. Got my macros.
PM macros, AM macros.
Got my macros. I'm ready for the day.
Yeah,
So this is the original breaker from London session, right here, 5-minute high low, when we took London's high, and
yeah, we're
it's been a struggle bus ever since.
yeah.
These equal highs. Oh, look at that. We hit the top of the daily volume imbalance for one more time. So why do I not have this on this chart? I do have it, it just wasn't extended all the way to the right.
Oh yeah, okay, I see what you're doing.
Okay, so Dixie hit the top of that daily inversion fair value gap. To the tick.
Mm-hmm.
Like, the tick. Not the body, the tick.
Right.
So, see, this is why we have to wait for this swing low to get hit. Because, you never know. It could just keep running up.
Yeah, agreed.
So now we just get a swing low to form, and then we just need a break of that swing low, and to look for longs. But I don't know, just us respecting this breaker like this and the daily volume imbalance. It's just it doesn't look good. We're about to expand, though. I'll tell you that.
That's what that little indicator's showing? An expansion time?
No, it's just from consolidation, we can't go into a reversal or a retracement. We can only go into an expansion.
Mm-hmm.
But once it actually does expand one way, then we can play it two ways. Because we know for sure from expansion, we have to have reversal or retracement.
Right.
Reversal versus retracement. That's the difference between your OTE, like your negative 27%, your negative 62% being hit or not. Because in a reversal, yeah, your OTE, it's like super profitable. You know what I'm talking about the 27% and the 62.
Mm-hmm.
Yeah, for your take profits 1 and 2. But if it was only a retracement, that means your OTE would never hit the negative 27 or the negative 62. You know what I'm saying?
Yeah.
You know what I'm saying, Kevin?
Yeah, I'm trying to follow. I need to really sit down and watch the rest of these videos. I think I've watched the first 6, and then found the silver bullet, and then haven't gone back to them. Over the 6 or 7 weeks I've been here with Darren, he's been teaching me things, but it's, I really need to watch them all.
Yeah. So I could just give you a quick example. You know about OTE? You gotta watch the OTE playlist. It's like 3 videos, but super recommend you.
That one I watched, yeah.
Okay. So consolidation, and then after this consolidation, we know we're gonna get an expansion. So it can be either downside or upside, right? But for the OTE that I drew this way, it's gonna be upside. Okay, straight to 79. From here, we know only 2 things can happen from price. It's either gonna retrace or reversal. So retracement would be like here, hit the top of this, like the top, or maybe there's a breaker there or something. That's retracement into expansion again. Or you're gonna get instead of retracement, you're gonna get a reversal, meaning when we come up here, it's just gonna keep going down. Right? So there's 2 ways to profit from this, because after a consolidation expansion up here, 2 things gotta happen: retrace or reversal. So either you take profit here and then let one ride, because you don't know if we're in the reversal, or you never know, or you just get out of your position fully right here and be like, okay, this is a retracement, let's just take the profit there. Does that make sense?
Yeah, I don't let anything ride. I just close the trade.
No,
That's one thing that I'm super consistent with. Super consistent.
One thing I'm super consistent not with is letting one ride.
As soon as I get to my 10 to 12 pips profit, that's it. As soon as it comes back down to 10, boom, close trade. That's it, and I call it a day. I call it a session.
Hey, I need those tips because you got funded, right?
That's all I do.
You got funded, so
10 to 15 pips, and soon if it hits 12 and it comes back down to 10, boom, close, and I don't look back. I just sit here and Darren shows me things, and that's all I do for the rest of the time. I just sit here and take in information. I just sit here on mute most of the time and just quiet, and that's it.
there you go.
He'll show a trade. He's like, all right, I'm going to go in on this, and I'm watching. I have it up on my screen. I don't take the trade because it's not my idea. Not my it's not. I didn't find the trade. It's not something I look at. Like you were just showing the ES earlier, NQ now. Like if you were like, all right, I'm going in on this, I don't go in on it because it's not something that I normally trade. I usually just trade the euro and the pound. I was trading gold, but I got fucked last week on that. And so that's just literally just euro and a pound for now.
Yeah, it doesn't matter what you trade though; it's the rules you follow.
Yeah.
And if you're if you're finding success with taking it all out and enjoying your day, then you keep doing that.
And that's why I kind of haven't gone back to the videos. I know I should. Because the silver bullet just works for me, and it's just simple and it's time based because I'm doing the London at work, so it's kind of like, all right, I need to be at the computer at this time for work, and then when I get home, it's it's whatever. But just because it's so time based that it works for my schedule.
Gotcha.
Because I don't have the the opportunity to sit here. I usually would have left here an hour ago, 11:30 or so. But you guys are going over and show me extra stuff, so just sitting here taking it in.
Yeah, I love this. Thanks,
Awesome.
Joey, for sharing, man. This is great.
No problem. It's fresh in my memory since I just learned it within the last couple months. So, I mean, these are the things that I want to keep implementing every day for the next, career.
Right.
These are the basic principles, that I just want to keep working on, so we can work on our ability to guess what's the next move. Darren, ICT said that this hindered him for 6 years. It's the fourth candle rule, like the 3 candles for your swing, and then your fourth candle if it shows a willingness to break that swing. Do you use that, or will you wait for a swing low or high to be broken before you enter a trade on a certain time frame or anything like that?
Yeah, usually you're looking for, what you've got here is just that break below an old low. If you see an old low or old high broken, then you wait. Typically, you wait for a break-in structure to the downside. That's the 2022 model, right? Break-in structure to the downside with a fair value gap. If there's a breaker inside that and there's a breaker inside the fair value gap, that's the one you load up on to go short. And then I scale out on, typically on each fractal low. I'll take 10% out each fractal low on the way down until you hit the bottom of the range that you've just created. And then I take like 80% off and leave 20% on to run.
I got you.
Joey, do you scale in, or do you just take your max position from the rip?
So today I scaled in.
Okay, just curious. Because I know Darren he scales in as well.
I am having a really hard time holding winners, so I cannot trade one contract because I need to
That's me. So I take my full 3. I just take 3 lots.
Yeah.
Is my max position. So I do 3, and I get the 10, 12 pips, and I'm done. I don't scale out. I just hit that, and that's it.
Yeah. Yeah, because I love taking that first profit and then having that room.
Yeah.
Just for mental capital and just, I don't know, all around it just helps emotionally handle the rest of the trade. But what I'm getting I see if I went 3 here, I could have got out here, and then maybe like saved a runner for up here, like the buy side liquidity that I had highlighted. You know. But to buy down here and scale 3 out, I'm not Michael J Huddleston, so I'll take it. Yeah, this is the old buy side that we already took.
See, when I scale out, I look at it as like profit lost. It's a weird way of thinking, I know, but
No, I understand what you're saying.
I just want to get to the, like, I feel so confident in when I do go into a trade that I'm like, all right, it's going here. And I'm just going to close the trade when it gets there. And when it goes higher, okay, whatever. I'm on to the next trade.
Yeah, nothing wrong with that, man.
If it's less, all right, I move it to break even and then it's, whatever. But.
So, here's another trade I can share with you guys. I find that the best trades I take, I'm scaling in. And I think it's because it's a confidence thing. Like for you to get back in to add to a position, like it's where it's going, or you have a good idea of where it's going.
Yeah.
I don't know if you guys can see this. It might be blurry, but this is ES on top, NASDAQ on the bottom, 30-second chart, and ES. I'm buying here at the 50%, and then 45 minutes later, I'm adding to the short to cover all the way down here. Like, that's amazing. I mean, I don't have enough patience to buy one here and then get out one here. I don't know. Or maybe, I don't know. I think, confidence is just a big thing when it comes to where you think price is going to go and, like, how you're going to manage the trade. Like, if your confidence is 82% for this trade, then you're going to manage the trade 82% better than you would if you had zero confidence.
Right.
But yeah, I'm trying to get better at scaling in and out with 3 and leaving the 1 out of the 3 for a runner, for a deep runner, for the -4s.
Right.
But also, I don't know if you guys saw this, but this was the projection. -4 standard deviation. That's why I got out here. And
gotcha.
Yep. And for NASDAQ, this swing projection, -3 lined up with, I guess, this liquidity void. So I got out down here.
And on your fib, you just put in -1, -1.5, -2, and all the way down, and it automatically lines them up for you.
Yeah.
Yeah.
Just like the other. Okay.
Yep.
I'm gonna set that up. I could have did it now, but.
Yep.
I'll do that tonight while I'm sitting there.
Yeah, and then just save your templates. And
yeah, I'll do that tonight. I'm gonna work up all my.
So I'm not gonna lie. I don't
stuff.
know if anyone else does this. I don't hear a lot of people do this, but I really don't care like what price is at. I know institutional levels are 30s and 80s or 20s and 80s. I think it's 20s and 80s. 20s and 80s. But like with the NASDAQ at 14420, 420, 420 blaze up. Like I don't care exactly what price is at. Like if it was up to me, I can look at no numbers and just trade the chart.
Mm-hmm.
I don't care where like whole figure numbers or $half numbers. I pay no attention to it because I'd rather just trade the chart, not the number.
Right.
So for the fib extension and my OTEs, I took off the price labels, make it more clean. Yeah. No price labels. Did we reject off the top to the tick? No. Almost. Of that breaker.
Yeah, it's pretty sloppy.
Oh man, if I can just make a living off trading equilibrium, that would be awesome. Swear, equilibrium is all you need. No, it's not all you need, but
Trading off equilibrium. Say that again. That's
like
the equilibrium of the range from the London to New York. Is that what you're talking about?
no, any range.
Oh, I see.
Any range.
Yeah.
Yeah. So I just got today's low, 952. Yeah, the low that swept this swing low. And with just the afternoon high, 11 a.m. high. And look at the equilibrium, just beautiful. And then respecting this H1 inversion fair value gap.
Right.
I don't know if you guys saw, but the M15 order block to the tick. Or not to the tick, but we're almost. It's perfect.
Yeah.
And that's an order block I like because it's the one that swept liquidity. So that's what makes it a high probability order block.
Oh, I see what you're saying. Yeah, yeah.
Yeah, so it's this 15-minute candle right here. Up here. Is the one that went above this high. So that's why it's high probability. So it's like it's high probability because market makers already took liquidity here, so why would they need to take it again right here? So that's why the narrative just fits.
Mm-hmm.
And can you get 20 points off that? Yep. ICT teaches, just get 20 off NASDAQ, get 5 off ES, and you can make a living, whatever. So that's why I look at equilibrium. I'm like, can I get 20 here? Or
Mm-hmm.
I look at the 62% retracement on the OT. Can I get 20 here? Because as you guys can tell, I'm very short-term type of trader.
You and me both.
Silver bullet.
Yeah. You're preaching to the choir, my friend.
I literally don't take any other trades. Like, you could be like lining this all up and going in on it, and I'm just gonna sit here and just cheer you on. I do one trade a day, and if my London is a loser, I don't trade New York.
There you go.
It's just one of the rules I have that I set up, and I just follow it. No more than 3 lots, which is mind-blowing last week that gold was at 20 somehow. I don't know what I did. That gold was at 20 lots, and I blew my account. And that's it. 3 lots, 10 to 12 or 10 to 15 pips. It usually ends up being around 12. And just take it slow. It took me over a month, a little over a month, like 32 days.
You got it though, man.
But
That's right.
baby steps, nibble them all out.
So we had that bearish market structure shift on the Dixie. What I was wanting to see off the daily inversion for rally gap that we touched right to the tick. And you ask yourself, okay, so we had a bearish market structure shift at 1248, but you go look at ES and NASDAQ, and there was nothing to long there at 1248. You would have been underwater.
Mm-hmm.
Longing up here, so this is non-symmetrical, which makes it low probability. Yeah, you can just tell Dixie wants this gap, the 25 October New Day opening gap.
Yeah.
let's see. Let's see if any swing projections can get me into that new day opening gap. Yep. Oh, guys, I don't know if you saw yesterday. Do you guys remember the 30-second fair value gap with the swing projection?
From yesterday?
Yeah, from it was like Nasdaq's chart yesterday. It's like a 30-second inversion fair value gap, and I was first telling you guys about the swing projections I had.
At the very start of the
It was this.
New York session, right?
It was yeah, it was at 10:44 yesterday. Remember, I was like, oh, another thing I want to note is I measured this manipulation leg, and it lines up to the tick with this 30-second fair value gap, inversion fair value gap.
Right.
Yeah, I mean, looking at it, I saw this, and I was like, damn, we're not gonna hit it. And then, whoop.
Yeah.
I was like, all right, these guys want to play games. Swing low, held till, yeah. So do you guys think that we're trading at the low of the week or the high of the week right now?
Let me see.
Because Monday and Tuesday usually gives us high week or low of the week.
Yeah. Yeah, right on the weekly, we're right in the middle of the consequent encroachment of the weekly fair value gap. We just keyed off of that. That was last week, I guess. So this week we're probably, let's see what we got here.
Oh, wow. You saw the weekly fair value gap for NASDAQ?
Yeah.
And you saw how yesterday, Monday's high was the consequent encroachment of the weekly fair value gap that we rejected off of?
Last week we had a consequent encroachment. We rejected off of that on the weekly. This week we've retouched the top of the fair value gap on the weekly, like to the tick. So yesterday, let me have a look and see if that was yesterday. Yeah, yesterday was the tap. There's a little small little imbalance in there now between yesterday and Monday. I don't know if you have the same thing on yours. There's
I have
on the daily. Yeah, see, there's a small price imbalance below. So I would have said, yeah, we've already reached the low of the week. So unless we key off of that, well, right now we're just banging off of that daily fair value gap high we're on the NASDAQ, right? We're talking NASDAQ? Yeah.
Yeah.
So we just hit off the top of, or the bottom of the daily fair value gap. So are we going to push up into that now, or do we just react off of that, and that becomes, yesterday becomes the high, and then we start coming back down to finish off the rest of that weekly fair value gap? So yeah, that could be, yesterday could have been the high.
I think we.
It's hard to say really. It could have been,
Yeah.
yesterday could have been the high or the low of the week, because that low yesterday set the price imbalance below it on the daily.
So for us to see higher prices, we would need to get above this daily volume imbalance, the one that's been created from Wednesday and Thursday of last week. It's just, I guess it's the new day opening gap.
Yeah.
And then if we do get above this, then we can go target last week's Monday's low, which is a significant swing low, mitigation block, and then we also have that Monday's weekly candle, 50%, the premium, daily premium wick,
Right.
which is on the top side of this weekly inversion fair value gap. But I mean, for us to go below this weekly inversion fair value gap, and then now to touch the 50%, the consequent encouragement, it would take a lot for us to get above here, because this looks like this is about the inverse.
Yeah.
That's what it looks like.
To run back down. Yeah.
It's a weird week. Especially, well, it's because we hit a monthly objective, that's why. Hit the monthly consequent encouragement fair value gap.
Last day of the month, FOMC meetings. A bunch of crap. Could you go over to the euro real quick? Would this be the... I watched only a couple of videos on the maker model buy side, the
MMBM, yeah.
Yeah. Is this on the 1 minute? Does this look like we're now starting the buy side of the leg?
No, because for us to, well...
It's possible. That's 50% of that small.
That's what I...
And we have a slight break in structure there, right?
Yeah. And
So, for the model to complete itself, it needs to get below some type of original consolidation. So, if you were to say that this was the original consolidation, then yes. But look at this little, like, this doesn't look significant where banks got in. You know what I'm saying?
So the one...
So this looks...
Below that?
Yep.
That
This looks like this is where smart money transfer happened.
Okay.
I'm gonna go to a 5 minute. Because 1 minute's just too small to. Yeah. Yeah.
Okay.
Yeah. Yeah. Look at this. Yeah, this is liquidity right here. This is like juicy liquidity because
Yeah.
this acted like a breaker, but this never swept the low. This swing low is still.
I mean, it's running. It's just the last 6 candles. Just
Yeah, I mean, so let's say this is the smart money transfer, first stage accumulation, and then this will be second stage accumulation in here. It can go all the way up to here if need be. I mean, but it probably won't. We're gonna want to see this 5 minute order block be respected, and then targeting
sell side, yeah.
this sell side. Or even this sell side. And even this, like this, looks like the original consolidation. But the fact that we came back into this 50% of this range right here, when we did that, you don't want to see that for your first stage accumulation. First stage accumulation should be like touching the top of this.
Right.
You don't want it to get like deep in here. So like the original consolidation, expansion away, to come back to touch the top of the consolidation to re-expand out for a second stage accumulation. Oh yeah, I mean, look at the monthly chart on the Euro USD.
Oh yeah, there's a lot of downside there.
Yeah.
We haven't even reached the top of the fair value gap yet.
No, yeah. So we still have a low resistance liquidity run coming up.
And we've retraced back into that order block there on the monthly. See how we came back into it? And the candle,
This order block?
the wick that we're in right now, the candle that we're in right now, we came back into the order block. We left a little fair value gap open there.
Okay.
Well, it will be if once this candle's finished. So as we finish today, that becomes the new fair value gap, right? So
yeah, that would be this guy. That's what this is.
Gotcha.
Yeah, I mean, and then
Like I said, I only watched a couple of videos on it, so I'm kind of. That's why I said I need to watch all the video. I need to take it slow.
yeah, when you see this, right here, you know, about to go down.
Okay.
About to go down, like Browntown. They're about to run that. Yeah, so people who were buying this today got destroyed, being trend line traders. So this is a form of liquidity. So yeah, this looks like the original consolidation right here, but to be safe, right here, targeting this low is good. Yeah, I would say bearish euro. But it's hard. How can you be bearish when you have this huge fair value gap up here?
mm-hmm.
You know? So yeah, I only see this is one stage of accumulation. I mean, unless I don't know, one stage.
Yeah, I agree.
There's no way this is a second stage right here. This one order block. There's no way. So this is second stage we're in now. Yeah, we're about to distribute down. This is going to be a breakaway gap. And here I can give you a quick rundown on what makes a breakaway gap a breakaway gap. From what I understand. And oh yeah, I did it. So here's this range on the 15-minute chart. I'm just using, what is this, Tuesdays, yeah, it's like midnight low, right? Just this range right here. But the fact that this candle broke down below 50% tells you this is a breakaway gap.
In one candle?
In one candle. Or it can be, preferably, yeah, one candle. It could be two, but, and it has to be strong down, but if you see this, like one candle breaking below equilibrium of a range, that usually makes it a breakaway gap.
Okay.
Because now, like, this is a range, so like the amount of resistance right here is a lot because it's this previous range. It's the equilibrium of previous range, so this is high resistance now right here. So for it to get back into here is going to be harder than it normally would.
Okay.
I think ICT is gonna cover this today. I think as a video comes out, he said October 31st he's gonna talk about second stage distribution, and maybe a little bit about the breakaway gap. I heard from one of his ICT spaces, but I'm not sure.
A tweet by him this morning saying it's going to be one of his last videos or something.
Yeah, last 12 hours is the last YouTube post.
Yeah.
Yeah, so he is gonna post it then. Awesome. So then he's about to cover why this trade right here on Euro is the best. Where he rather trade. If he knows he's gonna target sell side, this is where he would get it on second stage.
Yeah, that's the unicorn setup.
Yeah. See what the dollar is doing. Yeah. Dollar's doing what the dollar does. ES and NASDAQ, just non-symmetrical at all. Think, I don't know. I think I'm about to call it. I do want to trade the 2 p.m. I don't know. It's just so slow and non-symmetrical today. Speaking about objectives, we already hit. Yeah, ES already ran yesterday's high. Twice.
Yeah.
YM ran yesterday's high. NQ is still in the inside day, which is probably going to be like that all day. And then Dixie, we have an outer day. Oh, yeah. So when you see us, like, that we took out yesterday's low, it's a very extreme, high extreme if we're going to go take out yesterday's high in the same day. Like, that's an extreme. So for us to go take out yesterday's high, and you actually see it, you're like, wow, the extreme is in front of me, it's actually happening.
Right.
You can take a trade off that. It's the soup. You know this. If we already took liquidity down, then when we go and sweep buy side, that's the soup.
So if that's so you're anticipating the Dixie to go down, then is what you're saying. So that should put pressure on or relieve the pressure on the euro. So euro, you should get an expansion.
Yeah, Dixie, I say we need to go down to equilibrium.
That'll be your 1 minute. So when Kevin was talking about there's a market structure break on the 1 minute, that may be what you're looking at in terms of a small little retracement back into that 50% that the Dixie's doing in its range. That'll push the euro back up. But that'll be that second level of distribution that you're talking about, right?
Right. Yeah, like we expect euro to go up and play with this 5 minute order block. Definitely gonna touch it. So yeah, this can go up while Dixie goes down to rebalance itself. I mean, it's hard to say because we already had a breaker form and we already had the Dixie like play around in the breaker, and we already had the Dixie leave from the breaker.
Mm-hmm.
But you know that doesn't mean that we're not going to return to it. Let's see. Okay, I don't know if you're still watching, Kevin, but I want to see.
No, I'm here.
If see this big old candle right here, I want to see if when I draw the 50% of the range here, if when this closed, if it closed above 50% of this range. If it did, then it should qualify as a breakaway gap. There you go. Do you see it?
Yeah.
Mm-hmm.
So this prior range, this one candle closed above 50% like that, that's going to be a breakaway gap. I mean, not going to all the time, but I'm pretty sure how ICT teaches it. What I got from that. Yeah, Dixie needs to come down to this equilibrium, and ES and NASDAQ are probably, well, I don't know about the NASDAQ, but ES needs to come up and hit that new day opening gap, that gap we keep talking about from last Wednesday and Thursday, or just Wednesday. So now this bearish order block that was supposed to hold up price, we can use it for inversing. So now that it was supposed to hold up price and it didn't, now it's going to hold down price. Just want to see. Let's go into it and come back. So we should see some expansion coming from the indices within the next like 20 minutes. Oh, and I also want to note this. Can't even see it here. So this range is a 4-hour chart from 12 October 2022 to the high of 27 July 2023. 50%. 50% is what we're playing with today, yesterday. This is where you could be taking. This is a high time frame equilibrium. Here.
Oh yeah, okay.
So you can frame trades off of it. Yeah, it's big boy equilibrium. So holds up price twice here. Yeah, you can just tell it does some stuff, you know. Hold up price, holds down price right here. Perfect balance off of it this morning at 4 in the morning. Equilibrium. We're just gonna. And I guarantee you we're probably not even done with this equilibrium this week, because this is just going to be a chop fest week since we hit the monthly objective.
Mm-hmm.
And I think I know ICT said September, October good trading months, but I don't know about November. I think November and December it's supposed to slow down, right? Like all these rich people are gonna go take vacations, and all the traders are vacationing in November, December. So it should be slower markets next 2 months.
Yeah, he gets out after November, Thanksgiving, and he doesn't come back until the first week of February, I think.
Does he tweet less? I had to turn my notifications off. He tweets like 93 times a day.
Yeah, I think he's done Twitter and everything as of the November. But are you guys? I guess you guys aren't in his not trading view, in his. Let me see what it is here. You guys never took the full mentorship, I guess?
No.
No, you wouldn't be in that one then. He's got a private...
He used to have a private. He says he doesn't have it no more.
That's just for the mentorship, though. People who are the charter members. He's still got his little private page that nobody else.
Does he talk to it?
Yeah.
Oh, okay.
He occasionally pops in. Mostly it's everybody that's all his charter members are just going to town on it. And everybody's trading around in there and playing and giving their opinions on everything. It's a massive page of lots of information and thousands of people pouring in information.
Darren, are you a full-time trader?
Yeah.
You pay the bills with trading?
No, no. I'm a paramedic firefighter, so I got injured about 3.5 years ago. So my bills are being paid with WCB.
Nice.
Uh, 8 years till I can retire, and then hopefully I can do this as a fun and enjoyment, and hopefully by then I'll know it by then.
Mm-hmm. Well, you guys are lucky. You're starting out at an earlier age. Your brain is so, you guys can absorb this information. And when you're an engineer like this guy, Joey here, it's amazing. Your detail is excellent.
Yeah, the organization's crazy.
Yeah.
Thank you. It's just the beginning.
Yeah, you're absorbing it like a sponge, man. I love it. I love it.
It's my only job to absorb it. Hopefully I'm doing it right.
Well, you're doing a great job, let me tell you.
Yeah, definitely.
Thank you, guys. Now, see.
Tell Brandy thank you for
Yeah.
lending you to us.
Oh yeah, she knows. I wish I can just be like 2022 model. I'm gonna get profitable from this. Only trade this one thing. I can't, man. I'm like Michael. I gotta know why everything's doing everything. Like,
Yeah.
I gotta. So it's like I don't even plan on being profitable $1 before I finish all 12 core months content, or like, because I don't know. At the back of my mind, I feel like every single time I lose a trade, it's because I didn't finish the 12 months core content.
But he even says just learn one model and stick to it.
Yeah.
Right.
That's what I did. That's what I did with the silver bullet. I just learned
You're
that,
right.
and like that's it. So when you guys, that's why I said earlier about the buy side maker model. Whatever. I don't even know what it's properly called. I only watched a couple videos on it, and I'm like, this is more advanced. Like I need to know more of the basics. But the silver bullet works for me. It's as basic as it comes. It's time based. I don't want to sit here for 5, 6, 7, 8, 9, 10 hours a day.
Right.
Just, okay, I get there half hour before market opens or before the silver bullet. What's my daily bias? Okay, here it is. Okay, now I just wait. Sip on my coffee, yell at my inmates, and then I'm good.
Yep. Easy day.
In theory.
Yeah.
So my technical analysis reading and like my analysis is really good. I just gotta work on risk management.
Mm-hmm. Well, if you've only been doing this for 4 or 5 months, you're absorbing his materials super well. Like, it's amazing detail. I love it.
Thank you.
Yeah, it's impressive.
I try to study like at least 30 minutes a day, but
Man, I obsessed over this stuff for years. Like, I was part of his original 2016 mentorship, and I don't have the kind of detail you've got. I still haven't picked up. And I literally was live with him every day. I've watched every video that he's ever made. My brain does not absorb information anywhere near as good as your brain.
Wow.
And you're doing incredible. You really are.
thank you. Imagine what's gonna happen when I finish all 12 months.
Oh my God! What you got to go through is all his videos on his YouTube channel, that all the extra stuff he's been putting in, because there's stuff he's teaching on there that is not even remotely close to that core content.
Yeah, you're talking about the 2023 mentorship, right?
No. Just as all his videos, his daily videos, or there's every once in a while he'll put a video up on his live channel. Like, go to ICT Live and look at his videos there, and just go. His regular analysis will be like, yeah, that all makes sense. But then he'll put in a little nugget of information. You go, wow, that is excellent. That starts to tie in more and more. It's like he's dropping a new piece of the puzzle down, and it just pops out of nowhere, and it may be sitting in a 2 or 3 hour long video where he's on a rant about something, but he drops this nugget of information, and you go, oh my God, that explains so much about this and that you've mentioned before. And
Yeah.
you really just continue to chop away at those videos up until the last one he drops here in November. Just go back and make sure you got all of those down.
Will do.
And those things, I'll tell you, there's this. I've got hundreds and hundreds of pages of notes, of screen captures, notes that I've typed out, word for word, things that he said. It's like, I'm going to catch that word for word, exactly what he's saying there.
Oh my gosh, have you guys seen the ICT AI website?
No.
Oh, I'm sharing this with you guys. Well, it's just called ICTindex.io. But you just go into this AI website and just type in
Oh wow. What is
Order
an
block.
What is an institutional order flow?
or no, just type in anything.
ICT
know.
Index?
ICTindex.io.
I-O.
Profit. I'm just gonna type in profit. See what happens. Yeah. So every time he talks about profit, right? So what is profit? It tells you profit this, and then every single time he's talking about profit, it tells you where. ICT Twitter space, life apart from prop, September 3rd, 2023.
Holy cow.
And look, it tells you exactly what time frame. In the video, it said it.
That's amazing.
Yeah.
God, I gotta screen save that one.
Yeah. Plethora of ICT info.
I love it.
Yeah, when you just see higher low, higher low, higher low, higher low with a void below. Tells you something.
Mm-hmm.
And I love this. I love that this candle went straight past the new week opening gap, and that this candle never touched it again. So like, I love new week opening gaps. Like
Yeah.
for the last 6 months, I've always had new week opening gaps. Current last 8 weeks, right?
Yeah.
And when I see this tells me we're gonna come back and touch it because it needs to. Like,
When you break the 50%, you mean?
no, just like when we go through a new week opening gap like this, and then when we come down and don't even touch it, like it should have used it as a propulsion, like for price to propulsion off of
yeah.
the new week opening gap, and it did not. So that's just like, this is low hanging fruit to me. There. And then you got this, the building of liquidity with the higher lows. And I just love how it all lines up. The bottom of this breaker is the bottom of the whole range. The whole 50% of the range is the bottom of the breaker. And it's the top of the M15 inversion for Valley Gap. Things be lining up.
Mm-hmm.
Hey, okay, ES breaking out of the range. It's been breaking out. See, I hate this. You got the dollar climbing and you have ES climbing at the same time.
Right.
The last 4 minutes. So right here we just hit that old sell side liquidity, or It would.
Yeah,
It's just the low of Wednesday.
we're closing in on a 15-minute gap. Go back to the 15-minute gap. You'll see it sitting right
Yeah.
there.
I got it marked as a new day opening gap. Yeah.
All right, well, I got a dentist appointment. It's 12 o'clock my time. So I got to get going. I'm loving this, though.
Yeah, that's why I'm not even in bed yet. I should have been asleep hours ago.
Yeah, this is awesome, Joey. I really appreciate everything you've done here today. And you're welcome to come back and do this again tomorrow. It's beautiful. I love it.
Awesome. Yeah, no problem, guys. I will be here.
Okay, buddy.
All right. Later, guys.
Thanks, guys. Take
Later.
care.
Take care.
Wow. We had quite the treat today with Joey popping in and giving us a hand with some of his setups. How he sees and reads the market was absolutely stellar. Thanks so much, Joey, for popping in. Love it. Thank you for sharing all your knowledge. And that's what this community is all about. It's about coming in, sharing what you know. And there's no ego here. We're here to share. And I think this is wonderful. Thank you so much. And I hope the rest of you all enjoyed this as well. I feel quite privileged to be here with these guys and sharing this opportunity to pass on some of this wonderful stuff that ICT has taught us. So thanks again for showing up, and I wish you guys all the best, and I'll see you tomorrow. And remember, if you've got a little bit of love left in you, share that with some other people out there, because it's a pretty angry world. Remember, we're all in this for a short time, not a long time. So all the best to all you guys, and we'll see you again tomorrow. Thanks for popping in.